Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London with Tom McKenzie.
And here are your top stories. Rising COVID cases bring new lockdown measures in Europe. The euro continues its slump. Jerome Powell and Lael Brainard find out this week who becomes the next Fed chair as a chorus builds on the FOMC for faster tapering. And M&A Monday, the telecom space heats up with a bid from KKR for Telecom Italia and Ericsson making a $6 billion purchase.
Now, Tom, let's look at the futures and actually put all of those stories into context. Now, we're seeing a little bit of lift when it comes to the DAX. The futures, you can see pointing. I mean, is it higher start? There's a bit of green. It's practically flat, but maybe they're boosting from a bit of Deutsche Bank. Overall, we look at inflation. Don't forget, it's all about the Fed, as you say, with Lael Brainard and Jay Powell in play. But also, it's a shorter day because of Thanksgiving on Thursday.
Yeah, Joe Biden, the president, of course, has promised us that we will finally get a decision before Thanksgiving on Friday. It was a mixed close on Friday in the US session. The futures, as you say, pointing out. Now you're seeing gains of 0.2% on the FTSE 100. We're looking across the impact across the European space after stocks Europe 600 closed lower on Friday as the announcements came through. Drip by drip from Austria, Belgium, the Netherlands, and of course Germany in terms of weighing up this policy change, restrictions as COVID cases continue to soar across the Eurozone. The Spanish IBEX is gaining 0.4%. The CAC 40 is also higher by close to 20 points. We're also starting to question the consensus around March and the PEPP, that support program from the ECB, the December meeting, ever important for the European Central Bank as it has to weigh up the pressures of these lockdowns and what it means for the economic trajectory here in Europe. Over in China, by the way, you saw a change of language from the PBOC suggesting, at least according to Goldman Sachs and Nomura, that you're going to get more support for the Chinese economy. Let's change it up and see how things are playing out on a cross-asset basis. Francine was pointing out the futures in the US are pointing to gains of 0.3% after that mixed close on Friday. The yield curve, the flattest since the start of the pandemic, you've seen yields edging higher on the 2-year, currently 0.53. One to watch as investors start to weigh up maybe the commentary you're getting from the likes of the Vice Chair Clarida on changes to the taper, a faster rate of taper. Possibly that conversation starts in December. Euro dollar 112 at a 16-week low, at least at a 16-week low, down by 0.2%. Part of this, of course, is the ECB reaction function. The other is the COVID lockdowns that we're seeing across the Eurozone. Brent and oil in focus again, down 0.1%. Reports out of Japan that Japan, Tokyo, and Washington will be coordinating on the release of reserves. Fran?
Yeah, a lot of the focus, of course, on some of these oil majors. And Tom, this is what else I'm looking at. So let's have a look at some of the sectors that are moving the most. It's interesting to see financials behind me. I'm blocking it, but you can see it right there, actually, on the other side, my other left. Financials, one of the only industries that are gaining the most as a whole. I know Deutsche Bank was a little bit supported by the change of chairman. We also have a new chairman at UBS. They then need to be voted in spring for the AGM. Overall, the focus, not only on some of these telecom companies because of Telecom Italia, but also a bit of M&A when it comes to what's happening with Ericsson. The best performing sector up some 0.9% for telecoms. Basic resources, as Tom was saying, a lot of the focus also on oil. The second best performing up 0.6%. And finally, energy, utilities and consumers, only sectors where we see a little bit of pressure. Now, let's get straight to the Bloomberg Business Flash. Here in London is Laura Wright. Hi, Laura.
Hi, Francine. Ericsson has agreed to buy Vonage Holdings in the US for an enterprise value of $6.2 billion as the Swedish telecom giant strives to build its cloud communications business. The move comes as Ericsson's earnings have been hampered by both lost business in China and component shortages from a global supply chain squeeze. UBS has nominated former Morgan Stanley president Colin Kelleher as its next chairman to succeed Axel Weber. Kelleher will stand for election at the firm's annual meeting in April. Weber had previously suggested the bank considered appointing a female as his successor to improve gender diversity on the board. US private equity giant KKR has offered to buy Telecom Italia for 10.8 billion euros. Its preliminary cash offer is a 46% premium to Friday's close. However, we're told Telecom Italia's largest shareholder, Vivendi, is likely to oppose the offer, which it views as undervalued. The company's shares have lost half their value in just 5 years. That's the Bloomberg Business Flash. Tom, Francine.
Laura, thank you very much indeed. Okay, let's dig into these markets now and bring in RM Live editor Eddie van der Walt here on set with us in London. Eddie, let's start with the lockdowns then across Eurozone, across Europe, Austria, Belgium, the Netherlands. We saw the protest, the violence over the weekend. Maria today has been reporting out of Berlin saying that she's seeing no signs that governments and policymakers are going to be pulling back on these restrictions despite those protests. What about the market reaction?
You know, we did definitely see somewhat of a market reaction at the tail end of last week, where we just saw equities pull back a little bit. We saw, particularly in the currency space, a lot of volatility there. But you know what? I think traders broadly have accepted that there are going to be this long tail of COVID that will just keep markets under pressure, and we're seeing that now. So I think there was worry on Friday. I don't think that it has spooked people into taking completely risk off into the end of the year.
Eddie, the most difficult question I'm going to ask you today is what exactly is priced in? Are the markets already pricing in lockdowns in general in Europe, or certain parts being locked down for a limited amount of time?
I think it varies across which markets we're talking about in particular. I think we're seeing in the energy space that we've seen a little bit more of a pullback over the last few weeks, because of course, if you put people in lockdown, they don't drive anywhere near as much, and the impact on oil is immediate. The rate space, however, has been a lot more sanguine and have said, look, whatever's happening notwithstanding, we're seeing inflation, we're seeing more rate hikes going into next year. And I think that might have to be reassessed. I think the rate space for me is the one that's a little bit over-optimistic here.
Yeah, and Eddie, we heard from the Vice Chair of the Fed, Richard Clarida, over the weekend, opening the door, the possibility to a faster taper in December, at least the conversations around that. The market reaction to a faster taper, which brings forward arguably the rate hike cycle.
Yeah, absolutely. But then we're getting the opposite from the BOE, right? We're getting the opposite where perhaps there's too much.
And the ECB.
Yeah, there's perhaps too much priced in. So I think this is what COVID has done. It's split the world into various spheres that will be reacting at different paces depending on how quickly the recovery happens in those areas.
I mean, could we see oil turn negative? I don't know whether it was a quirk. I kind of even forgot that happened. I mean, I know it was so traumatic at the time, Eddie, but a lot has happened in the last 14 months.
In all of the craziness that we saw last year, I don't think we ever see that again, because I think that was just particular, to how ETFs were set up and so on. But I do think that there is risk to the oil market, which has been very well supported by OPEC cutting production and by high natural gas prices. But I think if we see lockdowns in a wider space, not just the few countries that we're talking about now, then yes, I think oil demand suffers, and we see oil prices come back.
Eddie, you bring us good news on a Monday morning. Supply chains, they're starting to ease, at least when it comes to things like shipping, chips.
Well, it ties in with all of that, right? Because I think we are seeing some of that supply chain pressure fading. We're seeing, the commodity prices just aren't as hot as they were in the first half. We've seen, commodity prices are high, but they're no longer rising. And to keep fueling inflation, they have to rise at a parabolic rate, and they're not. We're seeing the lead time in chips are shortening, right? Or at least not lengthening as quickly as they were. And shipping costs have come down significantly, whether you're talking about the Baltic Dry or whether you're talking about container prices. All of them have come down significantly from October. And that just shows, because these were really, the early signals that, inflation was coming. So perhaps Inflation's coming off.
I like that. It's very perhaps kind of Monday. The U.S. working week is also short because of Thanksgiving, and we should know before Thanksgiving who's in charge of the Fed, whether Joe Biden sticks with Jay Powell or Lael Brainard. I mean, the market is kind of shrugging it off, but it makes a difference for banking regulation.
It does. It does. I think from a policy perspective, it doesn't matter as much. But from regulation and green policy and all of these things, there are real, differences between these two candidates. But you say it's a short week. It is a short week, but it is a jam-packed
short, long week,
right? Yeah, exactly. I'm going to drink exactly the same amount of coffee as I do in other weeks. So we've got so much coming in, particularly on Wednesday. We've got so much data, and at any moment in time, we can get that Fed announcement. So no, it's going to be a busy one.
Yeah, watching for that one to drop, certainly. Eddie van der Walt, thank you very much indeed. As ever, busy for the MLive team, our editor here. Investors are weighing up the latest European COVID curves, as we were discussing there with Eddie, and the risk of a faster Federal Reserve taper. Up next, we discuss the latest market moves with Pieter Fourie from Sanlam Investments. This is Bloomberg.
Front, when your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation. And we believe that the Q3 was the quarter that was most affected.
I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
Welcome back to the Open. We are 12 minutes into the European trading day, seeing gains of 0.3% across the stocks benchmark, Stocks Europe 600. After closing in the red last week on Friday, of course, concerns about the policies being put in place, the lockdowns in some parts of Europe to tackle these rising COVID cases. In terms of your sectors, telecoms at the top of the list on the back of this news that KKR has put in a pretty significant offer for Telecom Italia. The bottom list, consumer products, are down about 0.1%. A breaking line, Redhead. By the way, on the Telecom Italia line, their shares rising almost 30%. after that takeover offer from KKR. So that is a redhead crossing the terminal. Telecom Italia shares rising almost 30% from on the back of that KKR news. Francine, you've been covering this as well.
Yeah. I mean,
you're in the weeds on this
higher.
story.
I mean, I'd like to think I'm in the weeds. It's very clear that actually there's something going on that, you know, people think that the main shareholder, Vivendi, probably won't get behind this, but we could see some kind of bidding war coming from other players, which could explain the 29% higher for Telecom Italia. That's quite punchy on a Monday.
It's quite punchy. We're going to get more details as well from Lizzie shortly. Just another redhead very quickly. CATL, this is the electric vehicle battery maker in China, overtaking ICBC to be the second biggest stock in mainland China, a supplier to Tesla and others. Okay, let's drill into some of the individual stocks that we are looking at. Lizzie Burden joins us now. Lizzie, what are you focused on?
We're looking at a lot of telecom M&A across the board. You've got Telecom Italia, as you mentioned, up in early trading. This is Italy's biggest phone provider, and after that KKR bid, it's up. Vivendi, the biggest shareholder, said to be against the bid, but the Italian government has welcomed it as good news. Clearly, the market agrees. Then over to Ericsson, the Swedish telecoms provider. It's agreed to buy American cloud communications provider Vonage Holdings. That's down in early trading. And finally, we have Marks & Spencer, the British retailer, up in early trading. After that news over the weekend, the Sunday Times reported that US private equity giant Apollo is mulling a move on M&S. And the Times reports today that the CEO, Steve Rowe, is gearing up to step down over the next 18 months.
Lizzie, thank you so much. Even M&S could be up for sale. I mean, it seems like, you know, everything's up for sale at the moment. I don't know whether it's valuations or this point in the economic cycle, but we should talk a lot more about all of this M&A activity. Joining us to discuss some of these market trends is the global head of equities at Sanlam Investments UK. He's Peter Forey. Peter, thank you so much for joining us. A lot of M&A activity. Is it because stocks are cheap, or is it because actually in this point in the economic cycle, now's the right time to strike if you want to get bigger?
Yeah, I think first of all, we've got to notice that your private equity firms, obviously they raise a lot of cash, billions being raised, they need to deploy that. And the market is quite, there's a big difference between growth and value again. So your very cheap, distressed businesses like Telecom Italia would be a prime takeover. But I think the UK market itself could see some of their big champions also being under threat. I'm just throwing a wild idea out there, you know, something like Reckitt's not been executing as well as they did. From the previous 5 years or the last 5 years, their debt's come down. So I think a lot of companies like that with good free cash flow yields and decent market positions could be under threat from very cash flush private equity businesses.
We love a wild idea on the show here, Peter. So we'll take that one and run with it. Where are we, do you think, in this cycle when it comes to M&A? And is there a risk a government's going to be more alert to this and step in over concern that some of their national champions might be gobbled up?
Well, I think in Europe it's very relevant. It's obviously less relevant in Asia because I think in many ways you can't even go there. I don't think anyone will attempt to buy some of the national champions out there. We typically avoid businesses with big regulatory risk like Telecom Italia. So if you look at it, the stock's obviously been a very bad performer over the long term. But if you are very, very cash generative and the valuation's low, and I guess importantly enough, you can recapitalize some of these businesses, then that changes the narrative for a buyer potentially.
Peter, so I know you're a global head of equities. Do you try and catch, you know, is it too difficult to catch a falling knife to try and actually go for a company that could become a target or at least an industry group that's quite M&A heavy? And, you know, why do that instead of just going into private equity funds, which seems like possibly a good way of dealing with this?
Well, I think the way we invest, we always say to our investors, we'd like to buy effectively self-funding takeover targets. And what do we mean by that? Over the last decade, we've had examples like First Data Corp and Syngenta, companies that were taken over by investors because they were just great businesses that were, you know, trading below intrinsic value. So when we buy, you know, and buy for the long term, it is a buy and hold mentality. I mean, you're not going to get a bid for Google, but the reality is through spin-offs and other, you know, opportunities that they have with all their cash flow, you can certainly unlock value without ever being bid for.
What are you changing in light of the lockdowns in Europe? Are you shifting the portfolio at all?
Yes, we have, if you look at June, early June, and until now, you actually see what I call a bit of a stealth rotation going on in the market again. You've got the top 5 stocks in the US back at 25% of the market. You have companies like Google and Adobe hitting new intraday highs on Friday. So growth is back with a vengeance. And you're seeing, subsectors underperform, which are travel related. You've got Amadeus quite weak on Friday, and it's not going anywhere really for the last 2 or 3 years. So we have sold companies like Bookings, and instead we try to rotate the portfolio into upside names. NetEase has done extremely well for us from the lows in September, and we've added more capital to companies like Visa, which just have some short-term concerns.
Peter, when you look at, I don't know whether to ask you about the payment space, because actually we saw Amazon really, being extremely hard in some of these card payment systems. Are prices going to go down for how much the transactions are worth?
Yeah, I think the investors are having a bit of a reality check with, there's no doubt that companies like PayPal are wonderful businesses and they've got a great potential market that they address, but it's just that things got a little bit frothy on the valuation side. And as companies like Amazon puts pressure on these payment companies, I think investors going through every single subsector in that payment space and just reassessing what's reasonable in terms of the opportunity set and valuation. So we welcome that sort of reality check. Certainly, a company like PayPal, which is under pressure perhaps from the news of Amazon and also other competition, is looking a lot more interesting than just 3 or 4 months ago.
Peter, shifting from the US technology, US payments to what's happening in China, what is your time horizon for Chinese technology stocks when you're looking to add to those? You talked about the success that you've had with NetEase. I'm also looking at Tencent, down 12% year to date, Alibaba down 40%. What is your time horizon?
Yeah, we've had a mixed year in China. I mean, certainly, our view that gaming regulation fears were overblown back in September. So we're really, looking quite good on being aggressive with NetEase, less successful in the short to medium term with Alibaba. So we are taking a bit of medicine there, but we do think that the margin pressure that we're seeing will stabilize from now on with all the competition they're experiencing. And on Tencent, we've been invested for over 5 years. It has been a great performer. We did reduce it back in January. I think, we see intrinsic value at 650 from the current levels of, the high 480s, 490s. And I think overall, the gaming part of their business will, over time, be less and less, and other areas like advertising and cloud computing will, as is the case with Alibaba, become more important, and it's probably quite undervalued on the long-term view.
Great. Thank you so much for all of your wisdom and insight. Peter Fourie, their Global Head of Equities at Sanlam Investments UK. Now, coming up, we're talking telecoms a lot more as KKR offers a big premium to buy up Telecom Italia. The details up next. This is Bloomberg.
will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
Welcome back, everyone. It's the Bloomberg Open. We're about 23 minutes into European trading day. And you can see we're seeing a little bit of positive news, certainly a little bit of a lift. There is still this mood of caution because of inflation, but it's a pretty busy morning for M&A news. So that's supported, for example, for some of the telecom stocks. And then I'm looking at the CAC 40 getting some 0.3%. Overall, it sees that equities also outperformed certainly what we saw in the last couple of weeks. Now, on to Telecom Italia. And of course, this is the main focus today, getting some 29%. The U.S. private equity giant KKR offering 10.8 billion euros to buy Telecom Italia. Now, that represents a 46% premium to Friday's closing share price, and it's sending the stock soaring this morning. Our expert in all things Italian and telecoms is our Milan Bureau Chief. He's Tommaso Ebhardt. Tommy, thank you, as always, for joining us. First of all, does the market believe that there will be other people interested that will drive the price further? And why this massive valuation? I mean, a 46% premium is pretty punchy.
Ciao, buongiorno, Francine. Yes, 46 premium is, it's a premium, but you have to consider that Telecom Italian shares have been trading near record low for the last few months. Take Vivendi. Vivendi is Telecom Italia biggest investor with 25% shares. They bought Telecom Italia stake at around €1 each. And now they have it at something like 0.8. So, yes, it's a big premium. No, probably is not enough for Vivendi. Actually, we heard that Vivendi will oppose KKR bid. So overall, we think that this could just be the beginning of a potential fight over control of Telecom Italia and its precious landline network.
Tommaso, what is the value that KKR sees in this business?
The main value that KKR sees in the business is Telecom Italia landline network. KKR is already a minority investor in the secondary grid of Telecom Italia. We reported a couple of weeks ago they wanted to bid for the whole network. They actually went all in, so they bid for the whole company to essentially get the network. Why the network is so important? Because Italy is now modernizing its telecom network with the 5G, and there are a lot of money to be spent with the European Recovery Fund. So there's a lot of interest on the network, which can potentially become a standalone company, a utility with a yield which is set by the government.
Tommy, did we hear actually from the government? I mean, in the past, every time there was some kind of big acquisition, there was always someone from the government saying, look, we have to remain Italian, or we should get better in Italy and not sell abroad. This time, has it been different?
This time has been quite different. Mario Draghi government last night sent a very positive statement. Our US should remember that Telecom Italia is partially owned by Italy. Italy state lender CDP, the second biggest investor in Telecom Italia with almost 10% stake. And Italy has a veto power or any deal involving Telecom Italia. It's called the golden power. But actually, the government last night said we welcome the interest in Telecom Italia, and we see positive interest by investors.
Tommaso Ebhardt, Adam Milan for us on that proposed deal by KKR Telecom Italia. Thank you very much indeed. Coming up, protests in Europe. We'll bring you the latest on the reaction to those COVID measures. This is Bloomberg.
目前眼前状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。要翻台的话，他目前有这能力，都有的啊，但要看怎么一个结局。说我们不做任何挑衅啊，但是说把他激怒了，就跟我们人一样，你把我激怒了，我手上能力我也会发挥出来。所以2025是我们研判要全面啊，我们这样研判的。
China has, I've spoken with Xi about Taiwan. We agree we'll abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to The Open, everyone. We're 30 minutes into the European trading day, and here are your top stories. Rising COVID cases bring new lockdown measures in Europe. The euro continues its slump. Jay Powell and Lael Brainard find out this week who becomes the next Fed chair, as the course builds on the FOMC for faster tapering. And M&A Monday, while the telecom space heats up with a bid from KKR for Telecom Italia, Ericsson makes also a $6 billion purchase. So we're right in the thick of it when it comes to M&A, and it's giving, Tom, a nice little boost to some of the sectors. It's a shorter week, so maybe a more intense but 3-day working week because of Thanksgiving in the U.S.
Yeah, we lead up to that holiday in the U.S., that decision that Biden has said he is going to make finally around the Fed chair. Will Jay Powell stay in place or be Lael Brainard? You have to wonder as well whether some of the upside that we're seeing in the European equity space is also a bet on continued dovishness from the ECB in light of these lockdowns that we're seeing in some parts of the Eurozone, and what that may mean for the economic drag. The European stock 600 gaining 0.3% after closing modestly in the red on Friday. The DAX also up by 16 points. You're seeing 20 points added to the CAC gain of 0.3%. Here in the UK, the FTSE 100 benefiting from the upside that we're seeing in basic resources. Oil is under pressure. Iron ore, though, up on the back of a change from the PBOC in wording that suggests, at least according to Goldman Sachs and Nomura, that you're going to see more support for the world's second largest economy. The FTSE 100 gaining 0.3%. Let's switching on then to the sectors. As Francine was saying, of course, that M&A activity with Telecom Italia and that bid by KKR front and center. The telecom sector, as a result, gaining 1%. Telecom Italia, the last time I looked, was gaining more than 29%. At the bottom of the list, you've got Travel and Leisure just off by 0.2%. That is the breakdown 30 minutes into the trading session as we look ahead to more data out of the Eurozone, out of the US, and leading up to that decision on the Fed chair. Now, Austria entering a fourth nationwide lockdown. That starts today. The country will also be the first in Europe to enforce vaccinations with a legal mandate coming into force in February. Germany's health minister, meanwhile, says he has not ruled out a similar move as it grapples with a brutal surge in cases. The situation across the continent has sparked protests as restrictions are reimposed. Joining us now from Berlin is our Europe reporter, Maria Tadeo, who's been following all of this for us. Maria, any sense at all that you're getting that governments are getting cold feet about these measures in light of the protests that we've seen over the last couple of days?
No, Tom, and that is what's relevant about the story. We saw the pictures in Vienna, The Hague, Brussels, big protests over the weekend, but restrictions are going ahead nonetheless. And today, of course, it's Austria that's very much in focus. We now have more information in terms of how this new lockdown is going to work. Essentially, the country is going to be shut for about 20 days. After that, restrictions on the unvaccinated population will stay in place. And then, of course, you have what is a controversial mandate to make vaccination an obligation. This is no longer a personal choice. This is an obligation. Now, what is interesting here, however, is that the Austrian case could set a precedent for other countries. And what the Austrian government is calculating and working on the basis is that they are ready to deal with the social pushback. They're ready to deal with the political but also economic ramifications of shutting down the country. But they want to focus on the health crisis. That is their priority, even if that means social pushback.
What does it tell us, Maria, about how governments are dealing with this? Are they pushing ahead with restrictions despite these protests at the risk of actually fracturing the societal fabric? If you look at, for example, some of the German infections, what kind of measures can they do without alienating half the population?
Yes, and Francine, that's a big question that a country like Germany is going to have to face and ultimately provide an answer to. What is interesting here, and it's almost always fascinating, is that a lot of the Austrian political debate does feed into Germany. Germany does tend to look at what is happening in Austria as a proxy. And over the weekend, Francine, there was a growing debate about whether or not there should be a government mandate for vaccination, to make this an obligation, the way the Austrians have done this. So the debate, especially in the political circles in Berlin, is not so much about a national lockdown in the country. There's big divergence between regions in Germany, but it's more about what to do with the vaccination. What do you do with the no-vax? This is a group of people who clearly don't believe in the vaccine, don't believe in the science, and also don't believe in government. So do you force them to get the vaccine or not?
$1 million question. I mean, it's so difficult, actually, ethically, also to see the way forward. Our Europe reporter there in Berlin, Maria Tadeo. Now let's turn to France. Eric Zemmour is yet to confirm his intention to run in April's presidential election, but already he's having a major impact on the race. Some polls have placed the far-right firebrand ahead of rival Marine Le Pen, a position that could see him face President Emmanuel Macron in a runoff vote. Well, Bloomberg's Caroline Conan sat down with him during his recent trip to London, and Caroline now joins us from Paris. So, Caroline, what did you actually learn from your conversation with Eric Zemmour? And good morning to you.
Good morning, Francine. Clearly, he was on a campaign trip in London, even though he hasn't officially announced his candidacy yet. This is something that he wants to keep for a French audience, probably early December. But he wanted to show that he has some views on the economy, and he was also, of course, looking for money in the city, looking for fundraising meeting with a financier behind closed doors. So when I asked him what he thought about the economy, he actually made a comparison with Donald Trump, because he has often been dubbed the French Trump for his controversial views on immigration, but also his views on the economy. So I asked him whether what he thought of this comparison and whether that meant restarting a trade war like Donald Trump did in 2016.
Je ne déteste pas qu'on me compare à Donald Trump, mais ça m'amuse toujours parce que...
I'm not upset that I'm compared to Donald Trump, but it always makes me laugh because you should always compare me to Boris Johnson. Just like me, he was a journalist and wrote history books. So I have far more intellectual affinities with Boris Johnson than Trump. However, the two have succeeded in something that I encourage and been asking for a long time in France, is the alliance between the popular classes and the bourgeoisie, the patriotic bourgeoisie that wants to defend its country.
Eric Zemmour prefers to be compared to Boris Johnson and the pro-Brexit camp rather than Donald Trump. If you look on the domestic front and his economic program, he hasn't really unveiled anything yet. It remains quite vague. He wants, for example, to raise the retirement age and finance lower taxes by cutting welfare on non-French, but he doesn't really have a clear view on supply chain issues or inflation. He was actually very skeptical during the interview about what the ECB president Christine Lagarde is doing regarding to inflation, even though he doesn't have a clear view on whether that means he is in favor of rising rates.
Okay, Bloomberg's Caroline Conan with that interview. A comparison with Bojo. There we go. Okay, let's get to the Bloomberg business first word news, I should say, with Laura Wright. Laura.
Thanks, Tom. It's reported Wisconsin police now say 5 people have died after an SUV drove into a Christmas parade. More than 40 people were injured when the vehicle broke through barriers and sped into the street where the parade was happening in a town near Milwaukee. Police say a person of interest is in custody and investigations continue. Japan is reported to be preparing to release crude from its strategic stockpiles as part of a joint effort with the US to rein in soaring prices. According to TV Asahi, the government has determined it can do so legally as long as it taps surplus supply. The International Olympic Committee chief says he held a 30-minute video call on Sunday with Chinese tennis star Peng Shuai, where she assured him that she's safe. Thomas Bach says Peng told him she wanted her privacy respected. Peng disappeared from public view earlier this month after alleging sexual assault by a former Chinese vice premier. The UK has added key Chinese COVID vaccines to its list of those approved by travel into the country, opening up easier entry for millions from Middle Eastern countries and elsewhere. Those who've received Sinovac, Sinopharm or Covaxin jabs will now be treated as fully vaccinated at the border. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom Francine.
Laura, thanks so much. Laura Wright in London. Now, coming up, a changing of the guard. Well, two of Europe's banking giants picked their new chairman. We'll discuss that next, and this is Bloomberg.
Competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. 42 minutes into the European trading day. Gains of 3 to 0.4% across these European markets. The IBEX over in Spain getting 0.8%. Italy is essentially flat. Solid picture here in the UK. The FTSE 100 gaining 0.4%. Basic resources a factor there. At the top of the list, sector by sector, telecoms on the back of this bid by KKR for Telecom Italia. Travel and leisure at the bottom of the list on a sector basis. Okay, UBS has nominated former Morgan Stanley president Colm Kelleher as its next chairman to succeed Axel Weber. Kelleher will stand for election at the firm's annual meeting. That'll be in April. Weber had previously suggested the bank consider appointing a woman as his successor to improve gender diversity on the board. Meanwhile, Deutsche Bank has tapped Alexander Wenantz as its next chairman to help guide the lender as it emerges from a decade of restructuring and upheaval. Joining us for more is our banking reporter, Steve Aarons. Steve, what do we know at this point about the new chairman?
Well, as you said, the UBS one is an investment banker, a US one. I mean, it seems to be a clear indication that UBS wants to keep a very strong investment bank. By contrast, the one hired by Deutsche Bank has experience a while back at ABN AMRO, which is cutting back its investment bank, and has been since then an executive in insurance. So I mean, he does have a little bit of investment banking, but it's from a while back. And that seems to be a lesser indication of investment banking focus then.
So, Steve, what exactly do these banks need from their chairs in the next 10 years? Is it focus on finance? You could argue that actually in the past 10 years, it was all about cost cutting and restructuring. How do these two banks now grow and gain market share?
That's right. It's about growth, I think, for both. In wealth management, probably for UBS, and perhaps in investment banking. In Deutsche Bank, a bit of investment banking. They don't have as much wealth management. Both, I think, both executives hired for the banks have digital experience, and that's something both banks have been highlighting for a long time. All banks are investing a lot in technology and digital, and so those should be traits that help the banks. And of course, both have. UBS has a new CEO. And he needs a sparring partner. Deutsche Bank with Christian Sewing has had a CEO for a bit longer, and we'll see how they interact.
Indeed. Stephen Aarons, thank you very much indeed in terms of the latest on the changes for the chairman at UBS and Deutsche Bank, the importance of digitization of these banking businesses. Okay, let's get the Bloomberg Business Flash now with Laura Wright here in London. Laura.
Thanks, Tom. Ericsson has agreed to buy Vonage Holdings in the US for an enterprise value of $6.2 billion as the Swedish telecom giant strives to build its cloud communications business. The move comes as Ericsson's earnings have been hampered by both lost business in China and component shortages from a global supply chain squeeze. US private equity giant KKR has offered to buy Telecom Italia for 10.8 billion euros. Its preliminary cash offer is a 46% premium to Friday's close. However, we're told Telecom Italia's largest shareholder, Vivendi, is likely to oppose the offer, which it views as undervalued. The company's shares have lost half their value in 5 years. The CEO of video games company Activision Blizzard has reportedly told senior managers he'd consider leaving if he's unable to quickly fix the company's culture problems. Dow Jones cites unnamed sources saying Bobby Kotick left open the possibility of stepping down. Activision Blizzard is facing lawsuits over claims its so-called frat house culture makes it a toxic place for women to work. That's the Bloomberg Business Flash. Tom, Francine.
Laura, thanks so much. Laura Wright there in London. Now, we're getting a lot more actually out of Germany. We now see some building of the government. So not any surprise names for the moment, but we'll break it down for you and also tell you what that means for Europe going forward. This is Bloomberg.
when you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Who's going to be the chair of the Fed?
Between Governor Brainerd and Chairman Powell.
Lael Brainerd.
Jay Powell.
I don't see much daylight between them.
Not a lot of daylight, honestly.
Fed monetary policy is still extremely loose.
Financial conditions, broadly speaking, are very, very easy.
Inflation is definitely running hot.
Whoever comes in is going to have to tighten rates.
The big differences, of course, are more on regulatory policy.
The reshaping of the Fed.
Who President Biden actually nominates.
Governor Brainerd. Chair Powell. It's a very significant story for 2022. Whoever's in the spot has a hard job ahead of them.
Well, some key voices there discussing the Fed's leadership, and we're expecting a decision from President Biden on the chair this week. He actually said before Thanksgiving. Thanksgiving is this Thursday. So welcome back to the Open. We're about 50 minutes into European trading day. A lot of these equities actually supported by a bit of M&A news. Certainly, we're seeing a liftoff when it comes to telecom stocks. Telecom Italia gaining some 29%. We're possibly expecting, if you look at valuation, the main shareholder of Telecom Italia, remember, this is a former Italian monopoly, Vivendi, probably saying, no, he's not behind the deal, but we could see other Knights or certainly other companies trying to circle this company because of its very lucrative business that could be transformed in terms of the landline networks. Now, let's also have a look at what else we look at this week. On Monday, U.S. Trade Representative Catherine Tai is in India for trade talks, and the CBI annual conference begins. On Tuesday, the EU General Affairs Council is meeting in Brussels. Wednesday sees FOMC minutes and data on U.S. consumer income and second print of GDP initial jobless claims. It's kind of like what Eddie was saying, right? It's like 3 packed days, but he's not going to be less caffeinated because it's packed.
Absolutely packed. And of course, that jobs data is going to inform where we're at in terms of understanding the wage pressures and the broadness of the labor build out and restoring and repairing in the US market. And that, of course, is something that the Fed is watching, contending with the time frame for taper. On Thursday, an EU Competitiveness Council meeting will look at regulation for tech companies. It's more interesting than it sounds, I promise you, including Amazon, Apple, and Facebook. And finally, on Friday, we have French consumer confidence data. How strong is the Eurozone consumer then? And can it continue to support, at least partially, the recovery? Now, Germany's next government is taking more of a concrete shape according to a preliminary list of cabinet posts that's been obtained by Bloomberg. Let's bring back in then our Europe correspondent Maria Tadeo for more on this. Any surprises, Maria?
Well, you know, if you look at the list, and of course, nothing is official until it becomes official, and that decision will come down to Olaf Scholz, who, by the way, is still not even the chancellor. So a lot of this, of course, is still to be confirmed. But the names here, to some extent, it's what we were expecting. We knew that Christian Lindner was very highly ranked to be the next finance minister, and we also knew that the Greens were going to get big jobs here. What is interesting is that this big economy kind of / industry environmental super ministry would go to Robert Habeck, not Annalena Baerbock, who actually ran in the election. A lot of this feeding into criticism that Annalena Baerbock did not manage to sustain momentum, and that even though the Greens did have their best result on record, she could have done or should have taken them much higher.
So we understand that Olaf Scholz is aiming to be sworn in as chancellor in the week starting December 6th. Maria, will he have a cabinet that has quite a lot of power? Can he get stuff through? Like, what are we expecting from him?
Well, you know, the way that this is going to work, Francine, is that we're expecting this week there will be a document that would signify and present the government priorities. This is seen as a coalition pact of the 3 different parties that will be joining in. Now, a lot of this, of course, is much more difficult than other coalitions that we've seen before in the past, because it includes 3 different parties that have 3 different ideologies in principle. Now, we're waiting for that document. Then it will have to be voted by the rank and file members. And then, of course, Olaf Scholz should be sworn in. A lot of this, of course, will be a very tricky balance. Again, it's 3 parties joining in. But the number 1 priority of the Scholz government will be dealing with the pandemic. And he's already signaled perhaps there will be a need for measures that the country hasn't seen yet, whether that means a mandate for vaccination or bigger lockdowns or more restrictions. It remains to be seen. But you could argue the mess created by the lack of action from the Merkel-led coalition ahead of the election, it's Olaf Scholz is going to have to clean it.
Okay, so Scholz and team will have to pick that up. What do we know from recent German history around the ability for these coalitions to iron out the policy differences during this period of building the coalition before they take power, and how they manage to keep a cap on those policy differences once they're actually in power?
Well, you know, what is interesting, Tom, this time around is the 3 parties that will join into this traffic light coalition, the Social Democrats, the Greens, and of course the Liberals, will put all of this in a document that they will present. They will explain their government priorities. A lot of this is a balancing act, especially when you look at some of the policies from the Greens compared to the Liberals, and then they'll say they'll stick to this working document throughout the time in government and throughout the coalition and the next term for this new government. So they want to present this document to say this is our plan, this is what we intend on doing it, and we can go back to this document whenever there's issues and tensions. But of course, we know that a 2-way coalition is always tricky. A 3-way coalition, you can imagine, will be much harder.
Interesting, great insights as ever. Maria Tadeo on the ground in Berlin. Thank you for the latest on how the coalition is shaping up in Germany. Let's check in on the cross-asset board then we have for you. We want to bring to your attention euro-dollar. We will bring to your attention oil as well. Euro-dollar, by the way, currently trading at 112.68, so a further pressure, down 0.2%. Of course, weighing up the lockdowns in Europe, but also whether or not you get a change in the policy function from the ECB. The futures in the US pointed to gains of 0.3%. We want to focus in on the 2-year yield as well. Further gains there. The yield curve at the flattest since the beginning of the pandemic, and oil is currently gaining actually 0.5%. There's been news out of Japan that Tokyo and Washington may coordinate the release of some reserves. Fran.
Now, there are 2 stories actually that we need to keep an eye on, of course, in the telecom space, and they're both related to M&A. First of all, the U.S. private equity giant KKR offered to buy Telecom Italia for 10.8 billion euros. This is a move that will likely see opposition from its largest shareholders, Vivendi. At the same time, it could be just the beginning of a fight to control the company and the most precious asset that Telecom Italia has, which is the landline network. On the back of that news, Telecom Italia gained some 23%, and then Ericsson has agreed to buy Vonage Holdings in the U.S. for an equity value of $5.3 billion. A bit of pressure on Ericsson. The takeover is yet to be successful, but if it is successful, if it gets the green light, it will actually be Ericsson's largest ever deal. So something to look forward to covering in the weeks ahead.
Yeah, a lot of activity on the corporate front when it comes to M&A. A bit of a relief, because there's always this macro that we have to weigh up, but the corporate story is very strong indeed. Okay, that is it for the European market open. Green on the screen here, 56 minutes into the trading day. Surveillance Early Edition is up next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Rapid improvement in the labor market and the deteriorating inflation data have pushed me towards favoring a faster pace of tapering.
I'll be looking closely at the data that we get between now and the December meeting.
We have to make sure that we ease that supply chain. The president's been very focused on that in making sure that turning the ports into 24/7.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Anti-lockdown protests spread across Europe while Belgian police fires water cannons at demonstrators. Austria starts a 20-day national lockdown. Powell or Brainard? Well, this week we found out who becomes the next Fed chair. Of course, builds on the FOMC for faster tapering. And M&A Monday, the telecom space heats up with a bid from KKR for Telecom Italia. Ericsson makes a $6 billion purchase. Now, first thing is first, let's get straight to the markets. And this is a picture across the board. You can see the European stock 600 gaining some 0.3%. This could be supported by some of the data that we have on Wednesday. Remember, it's a shorter U.S. week, working week, because we have Thanksgiving on Thursday. It's by Thursday, actually, that we're expecting also Joe Biden to decide on who the Fed chair will be. The focus is also on the telecom space, so 1.4% as a whole. But actually, a lot of the focus is on Telecom Italia. That was gaining some 23%, and then euro dollar 112.68. The worry on euro is, of course, some of these additional lockdowns as we get onto the winter months. And then Bitcoin, always a good idea to look at Bitcoin, 57,453. Now, if we have a breakdown, of course, it's a different story if you look at the DAX, practically unchanged to the CAC 40, 0.3% higher. I'm surprised that the FTSE MIB is not gaining as much just because of that support from Telecom Italia, but it did start from a low base, and then you can see sterling sterling is something that we look at because of the BOE, but at the moment the FTSE gaining some 0.3%. Now, Austria returning to a full national lockdown. Meanwhile, protests against new COVID restrictions have taken place across Europe this weekend. Now, from midnight, Austrians have been asked to work from home and non-essential shops have closed. People also clashed with the police in the Netherlands and Belgium. Well, joining us now from Berlin is our Europe reporter, Maria Tadeo. So, Maria, first of all, are governments pushing ahead with restrictions despite these protests?
Yes, Francine, they are pushing ahead, and this was a weekend of protests. You mentioned it there. We saw pictures coming out from Vienna, but also The Hague and in Brussels. I know I was stuck in traffic for an hour yesterday, really scenes that we hadn't seen since the first lockdown. But nonetheless, these restrictions are going ahead for sure. Of course, today is Austria that's in focus. We know there's a full national lockdown that will be taking place. And Francine, right now, we know the way this is going to work. So it's going to be a 20-day lockdown. Once that period ends, restrictions on the unvaccinated population will remain. And then, of course, the big measure, the star measure that nonetheless is very controversial, will kick in. And that is the obligation for vaccination. This is no longer a personal choice. It will be a government mandate to get this vaccine. Of course, what sets a precedent here, Francine, is that the Austrian government has decided we can deal with the political ramifications. We'll deal with the economic ones, but we want to face on the health crisis heads on, even if that means social pushback. That could set a precedent for other countries that are seeing a very similar infection rate to Austria.
Yeah, I guess it depends on how much of a pushback you actually see, whether it really touches the social fabric of a society. When you look at Germany, Maria, of course, we're very focused on what happens there. What type of new measures are envisioned?
Well, you know, Francine, we know that this week the measures were agreed last week by the federal government and the regions will begin to take place. That is, of course, strengthening restrictions for the unvaccinated and the 2G rule, that is a test or proof of recovery. But Francine, there's a growing debate in Berlin, particularly in the political circles, about whether or not the German government should go for a stronger vaccine mandate. In other words, to do something similar to what we're seeing in Austria. Until now, the criticism of the German government is that it has been too lenient, perhaps, especially when you look at the no-vax population, the sector of society that simply does not believe in this vaccine. So the conversation in Germany is not so much a national lockdown, but it's on the vaccine mandate, whether or not the next chancellor, Olaf Scholz, will have to get tougher on those restrictions, but also force it perhaps on populations.
Maria, thank you so much. Our Maria Tadeo there joining in Berlin, our Europe reporter. Now we're joined by Callum Pickering, senior economist at Berenberg. Callum, thank you for joining us. We need to talk about inflation, central banks, everything in between, but actually let's start with some of these potential lockdowns. If you look at how you model the European economy, can we survive 1 or 2 weeks of lockdowns without a meaningful impact on the economy, or do you have to rechange your forecasts?
We probably will see some short-term dent. The thing to remember is, take the last 18 months as the example, with each new lockdown, the economic consequences have been less significant. It's partly because we've learned how to adjust behavior. We've introduced various protocols in construction and industry, which is very important. It's also that policymakers know how to deal with these lockdowns, and people know that policymakers know how to deal with the lockdown, so the confidence effect is less bad. So we probably get an interruption, and then things start to recover once the restrictions are eased.
So it doesn't, does it impact actually the price of oil? Does it actually, change the trajectory for inflation, or as long as it's like 2, 3, 4 weeks, then it doesn't, meaningfully change the trajectory we're on?
I probably don't think it changes the trajectory, and actually demand for oil is probably a bigger question of, we have such a shortage of goods and production across the advanced world. We're going to be demanding oil and other commodities in big numbers, and that is irrespective of what happens over the next 2 or 3 weeks with consumption or with lockdowns.
Cam, I know we'll talk about the UK in a second with the Bank of England, but overall, are you in the transitory camp of inflation? I don't even know if we call it transitory, but certainly at some point in the next, 7 to 8 months, it comes down.
Well, use Fed speak, the definition of transitive is becoming very flexible. I think the big hump passes. It's unclear when that passes, but we're probably heading into a more inflationary environment. So UK, US are probably core plus 2% world, so 2.5%, 3%. Eurozone, I think we're going to be above 2%, and that's a 3 or 4 year forecast. So once this pump passes, we're in that inflationary environment, and these second round effects become much more serious if you think that we have more inflation to come.
So what does a policy mistake look like from the Fed?
A policy mistake looks as follows. The road is bending very, very sharply towards much more inflation, and the Fed has to steer the car along the road. So I think moving too late is much more serious at this stage than moving too early. And I have to say, the US economy is booming, the housing market is strong, the inflation data keeps surprising to the upside, the Fed keeps revising its forecast up, and the Fed is still buying a lot of paper. I think markets will start to get nervous if we have 2 or 3 more inflation upside surprises.
Calvin, does it make a huge difference, actually, of who's in charge of the Fed in terms of dovishness? There doesn't seem to be, that much of a difference between a Lael Brainard and a Jay Powell, but we could see a lot more in terms of regulation and banks.
That's right. I mean, the Fed has an inflationary bias. Now it has a dual mandate. It no longer has the point average mandate that the point target that the Bank of England and the ECB have. It has this dual mandate. The Fed wants to run the economy hot in order to raise employment, raise participation. Policy is set by committee, so changing the head often doesn't make much of a difference, but the regulatory stuff gets a little bit more interesting.
Callum, I also want to talk about the UK. I mean, the Bank of England kind of repriced all of the, the gilts with a massive disappointment in the markets last time around. Now they seem to be talking up in that, it's a more fine-tuned kind of balance. So does the market get it right? I mean, was it a problem from the Bank of England communication point of view, actually how the markets interpreted it last time?
I think it was both. The Bank of England overdid it in its communication. I think the market was probably right to suspect a November hike. The problem the Bank of England has got is its communications are just a mess at the moment. It said in its most recent policy statement, it'll look at labour market data, inflation, and measures of demand in order to judge the appropriate time for hikes. And all of those data have surprised to the upside before the December meeting.
Why is communication then so difficult to actually get right? I mean, the Fed does it.
I think the Bank of England, along with other central banks, still use as their template for the future the post-Lehman decade. They're convinced that we have slow growth, chronic pessimism, disinflation, and so this hot phase will pass. And they're afraid of the type of policy mistake that the ECB made just after the financial crisis.
That was the tree-shaped move.
That was right,
as we
yeah.
Actually, kind of call it. Cam, so when you look at inflation in the UK, when are you expecting the first interest rate hike? And can they actually hike before the Fed?
They can hike before the Fed. I mean, the idea that you follow the Fed, that works for financial markets, risk markets. The Fed's it's the conductor of the global economic orchestra, for want of a better term, but the Bank of England will need to adjust its policy according to its mandate, which is more hawkish. So I think we should be on for a December hike, if not February. And the bank said a rate hike is appropriate in coming months. So if the Bank of England doesn't hike in December or February, it has an even bigger communications problem, because it will have gone against its previous guidance, despite the fact all the data has gone towards tighter policy.
Callum, thank you so much. Callum Pickering there from Berenberg. He stays with us. Now, UBS and Deutsche Bank set a course for their next era with a new chairman. We'll get more on that story up next, and this is Bloomberg.
An extra $1 trillion in spending, not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal. But Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, UBS has nominated former Morgan Stanley President Colm Kelleher as its next chair to succeed Axel Weber. Kelleher will stand for election at the firm's annual meeting in April. Well, Weber had previously suggested the bank consider appointing a woman as his successor to improve gender diversity on the board. Then, over in Germany, the Deutsche Bank has tapped Alexander Wienans as its next chairman to help guide the lender as it emerges from a decade of restructuring and upheaval. So to look at the two men in the job and actually what the banks need at the moment, let's get straight to Bloomberg. Steve Ahrens in Frankfurt. So Steve, first of all, what do we know about the new chairman, how they're going to help with the bank, and also what these banks need in this transition phase?
Yeah, hi, Francine. So, as you said, Colm Kelleher is certainly a very experienced investment banker. He's going to bring that experience to the UBS, which has a big investment bank. And there's been discussions in the past just how much it wants to keep. But, to appoint someone with that investment banking experience certainly shows that they want this. It's probably a good sign for the investment bank. At Deutsche Bank, Alexander Wienans, he's more of an insurance executive. He used to work at ABN AMRO, Dutch bank, a long time ago. But again, he's more of an insurance executive. However, he has restructuring experience, and they say he's got digital experience. So that's something I'm pretty sure Deutsche Bank is looking for. One point I think that's worth highlighting, as you said, they're not diverse. All of them are men. They actually, both UBS and Deutsche Bank also appointed vice chairman, and again, they're men. Deutsche Bank also appointed new chief risk officer, also a male person. So there's certainly no progress here in terms of diversity.
So how big of a deal is this actually for Deutsche Bank and UBS, and what will their main focus be? Is it all about, fintech and how you drive into the next generation and the next decade?
It's about the investment bank, it's about digital. I think, especially for Deutsche Bank, it'll also be a bit about M&A. So Alexander Wienans, he does have M&A experience. There's been discussion what Deutsche Bank can buy in the past. So now that they're coming out of their big restructuring and their focus is shifting to growth, I'm pretty sure that M&A considerations will play a role going forward. And perhaps this person is a good person to steer this. And both these appointments are big changes for Deutsche Bank. Both Axel Weber and Paul Achleitner at Deutsche Bank have been in their jobs for almost 10 years now. So somehow eras come to an end at both banks at the same time, really. It's a bit of a coincidence here, I guess. But yeah, I mean, really big changes at those banks.
Steve, thanks so much. Steve Ahrens there in Frankfurt joining us on some of these changes at the top. Now we're back with Callum Pickering from Bloomberg. Callum, when you look at some of these, big banking, giants and some of the valuations that we'll get onto in a second, but overall, it depends on what they need depending on the economy, right? So we have negative rates still in Europe. There's a lot to navigate. Where are we in the business cycle?
It's a good question. We've had a historic recession, but we've also had a historically fast recovery. The US is already above its pre-recession level of GDP. That was Q2. Much of Europe's probably going to get there around the turn of the year. So we've had that recovery phase almost in the blink of an eye. Now it's the upswing phase where we go beyond our pre-recession level of GDP. And if I really lean back, we have supply chain issues, we have strong demand, we have inflation. This looks a lot like a business cycle where we're hitting capacity constraints because we've recovered fast, and now all the price signals are telling workers and firms to invest, to move jobs, to retrain. So this is on the whole positive. The question is, will this momentum carry for the next few years? My hunch is actually that it will.
So what does that mean in terms of what you need? I mean, what's the biggest pitfall actually for a banking executive or any kind of executive right now? Is it supply chain issues that could affect their customers if you're a banker, or is it something else?
I worry about an inflationary overheating where central banks then have to panic and slam the brakes on. Balance sheets look good, so households of record net wealth, labor markets are strong, there's a lot of excess savings, property values are going up, the yield curve should be steepening. It's not, that's a different question, but it should be steepening.
It's a good question.
So demand for credit in a steepening yield curve environment should be pretty good for financials, and the banks on the whole in Europe and the US, Northern Europe at least, are very well capitalized.
But when you look at the Treasury yield, does it make you nervous about some underlying factors that could actually, make us go sideways instead of the trajectory forward?
So if I look at a Treasury yield or any 10-year yield for that instance in the Western world, it would lead me to believe that either A, the market believes that central banks are going to make a mistake and kill the upswing, or that actually all this heat is just going to pass and we're back to disinflation or the Japanification story. It may also be that the Fed, the ECB, and the Bank of England are just buying far too many bonds, and they're driving down these yields, and bondholders just don't care that much about interest rate and inflation risk. That's also possible. So I think when the Fed, the Bank of England start to withdraw some of this liquidity, I think we should be ready for some action in bond markets.
Callum, thank you so much. Callum Pickering, their senior economist at Bloomberg, joining us on a number of issues today. Now, coming up, we're talking telecoms as KKR offers a big premium to buy up Telecom Italia. The details up next, and this is Bloomberg.
esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá, nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it's a busy morning for M&A news, in particular the telecommunications space. The U.S. private equity giant KKR is offering 10.8 billion euros to buy Telecom Italia. That represents a 46% premium to Friday's closing share price. But the move could set up a fight with Telecom Italia's biggest shareholder, Vivendi. Now, meanwhile, Ericsson has also agreed to buy Vonage for $6.2 billion. Well, joining us with more is Giles Turner, Bloomberg's managing editor for technology, media, and telecoms. Giles, it's all happening today. First of all, good morning, and thank you so much for coming in. But what's next for the bidding process of Telecom Italia?
Well, I think, first of all, this is going to get really, really messy, in my opinion. So as you just said, Vivendi's the largest shareholder. They've been very vocal about what they think about the CEO recently. That hasn't been going very well. I think Bloomberg Intelligence has worked out that they paid an average of €1 a share. Yep. And this bid is half that, so they're not going to be very happy with this. And then you've got the Italian government coming in. They've got a veto on this deal. We don't really know what they think yet. They're being quite mute about this. And then we've got CBC and Advent in the background thinking about maybe they're going to come in. So I think it's going to be quite messy. KKR obviously haven't put a direct bid. They've got 4 weeks to work out what they're going to do. So I think if I was thinking what they're going to do, they're trying to see how this is going to play out. They already own a stake in the fiber network of Telecom Italia. Maybe they want to just take that. Maybe they're going to work out how they're going to split things off. I think it's going to get messy.
Giles, what's when you look at the landline network, is this kind of the jewel in the crown? And could we see more private equity companies or just more companies in general trying to bid for Telecom Italia so that they have this very asset?
Yeah, I think that's a very interesting point about what's so valuable about Telecom Italia. We kind of thought originally that they were going to look at just the fiber networks. This is, if I was the government, this is what I want to keep, right? You can think about splitting off other parts of the business, but this comes back to the fact that telecom networks are so undervalued right now. Yep. Haven't been very proactive about getting good margins over the past 5 years. They've been stopped for doing lots of mergers with each other by the European regulators, and they've changed their tune recently as well. Yeah. I think they want mergers between the big telcos, but private equity coming in because everything is so cheap right now.
Giles, so I was going to ask you, why are we seeing so many telecom deals, which you've answered? Are we going to see much more telecom deals? And again, how much will these be transformed? I know Ericsson is going after someone, but actually this is all about cloud.
Yeah, I think this is just the tip of the iceberg. I think next year we're going to see a lot more big telco deals. We get the understanding that a lot of the executives between the big the networks in Europe are talking to each other, trying to work out what the best situation is for them. There's a lot of activist shareholders as well in these telco networks as well, and so they're going to have a say in this. I think it's just the tip of the iceberg. And the point you made originally about it's quite an exciting day for telco. These things don't happen very often. This is Ericsson's largest deal ever. Yeah. And this has kind of been put on the wayside because we have this huge issue with Telecom Italia. Yeah. Normally this would be a really big deal. But it goes to show how many deals there are right now, potentially.
Yeah, so many deals. And actually, Ericsson, on the way down, I think that the share price was down some 4%. Last time I checked, Telecom Italia gained some 23%. Giles, thank you so much. Giles Turner there, who oversees our coverage in media and telecom. Now let's get straight to the Bloomberg. First word news, and Bloomberg sources say that the U.S. has shared intelligence with European allies that shows a buildup of Russian troops and artillery to prepare for a rapid, large-scale push into Ukraine. Now, Putin last week denied any intention to invade, but said he welcomed the alarm as evidence his actions had got the attention of the U.S. and its allies. It's also reported Wisconsin police now say 5 people have died after an SUV drove into a Christmas parade. Now, more than 40 people were injured when the vehicle broke through barriers and sped into the street where the parade was happening in a town near Milwaukee. Well, police say a person of interest is in custody and investigations continue. Japan is reported to be preparing to release crude from its strategic stockpiles as part of a joint effort with the U.S. to rein in soaring prices. According to TV Asahi, the government has determined it can do so legally as long as it taps surplus supply. Global news 24 hours a day on Bloomberg and on Quick Take. Now, we'll have a lot more, of course, on the markets. So we'll also look at French politics. Coming up 5 months before the next French presidential election, could far-right firebrand Eric Zemmour be a real threat to President Emmanuel Macron? We'll talk about that with our reporter over in Paris, Caroline Conan. That's coming up shortly, and this is Bloomberg.
represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seems to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm on.
I noticed that.
Do you think I need a lift? Is it time
What did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Anti-lockdown protests spread across Europe. Belgian police fire water cannons at demonstrators. Austria starts a 20-day national lockdown. Powell or Brainard. This week we found out who becomes the next Fed chair. Of course, builds on the FOMC for faster tapering. And M&A Monday, while the telecom space heats up with a bid from KKR for Telecom Italia, and Ericsson makes a $6 billion purchase. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So first thing is first, let's check on the markets. A lot of the focus, of course, will be on the data. Tomorrow we have European and U.S. PMI. Today the focus is certainly on a lot of the M&A sector, the telecom sector, which is seeing a nice rise, but still, overall, a bit of a cautious mood when it comes to inflation. So these European stocks are boosted by deal activity, but sentiment remains on edge amid expectations of this quicker than expected tapering by the Federal Reserve. And at the same time, we look at U.S. stocks trading near record levels, outpacing the rest of the world as investors see few alternatives amid rising inflation. We look at valuation and the difference between U.S. and European stocks. Euro dollar 112.82, a bit of pressure on euro because of the lockdowns and some of the protests. Now let's turn to France. Éric Zemmour is yet to confirm his intention to run in April's presidential election, but already he's having a major impact on the race. Now some polls have placed the ultra-right media pundit ahead of rival Marine Le Pen, a position that could see him face President Emmanuel Macron in a runoff vote. Well, Bloomberg's Caroline Conan spoke with Zemmour during his recent trip to London. Caroline joins us now from Paris. First of all, Caroline, how extreme is Éric Zemmour by French politics standards?
Well, if you compare him to Marine Le Pen, the other far-right-wing leader who's basically been the official far-right-wing candidate over the past few presidential elections, Éric Zemmour does appear to have much more extreme views than her on the economy, on immigration, and actually he makes Marine Le Pen appear soft. In fact, Marine Le Pen has accused him of dividing the national camp and helping Emmanuel Macron to get re-elected. But what I was interested in when I sat down with him in London on Friday was his views on the economy, because we never hear him about the economy. He doesn't have a clear economic program or clear view on trade or inflation, for example. So I started by asking him what he thought of the current stance of the ECB president, Christine Lagarde, on inflation, and whether he thought, like her, that inflation is temporary.
Elle dit ça
She just says that in order to reassure everybody, to reassure the markets, particularly to justify the European Central Bank's desire not to increase their interest rates and not to interrupt its quantitative easing policy. But if the European Central Bank, under the pressure of the Germans, felt obligated to increase the rates, then we wouldn't be laughing so much. The French, the Italians, and the Greeks are even worse, actually. I believe that there's, first of all, a source of concern.
One thing fueling this inflation is, of course, the energy prices. Russia is one of Europe's biggest supplier of gas, and gas prices are obviously surging. What needs to happen there with Russia?
Well, look, it's not Russia that is solely responsible for the increase of gas prices. What is far more serious is that there we are also paying for Germany's decisions and the European Commission's decision to play against the nuclear, and also the French government that has actually neglected for years nuclear energy.
But President Emmanuel Macron announced just last week that he now wants to relaunch new nuclear reactors, so he's right.
Well, did you not realize that presidential campaign is in 6 months? 6 months, and many people had said that they wanted to relaunch nuclear power stations, and we had lost it because there was this disdain for nuclear for 4.5 years. He had time to do it. He didn't do so. Now he's saying he's going to do so. That's fine and dandy. But frankly, really, that's being converted to last minute.
Marine Le Pen has actually accused you of dividing the national camp. Would you unite behind her if she's higher in the polls by March, and vice versa?
You know, there's nothing divisive. Everyone is allowed to present themselves. We're not talking about a parliamentary regime like in England, where only the political parties have campaigns. It's a French situation. The presidential campaign, which was decided by Général de Gaulle, is in fact the meeting between a man and a people. It's not the meeting of a political party with its financing.
Caroline, certainly he has been very divisive. I mean, there's also multiple death threats because of some of the things that he's said. Does he really stand a chance against Emmanuel Macron, the Republican nominee, who will be chosen early December?
So if you take the two-round French system, that means Éric Zemmour, even if he does manage to pass the first round, has very little chances to get elected in the second round of the French presidential elections. But he could be disruptive in the first round, especially his position with Marine Le Pen. Whether Marine Le Pen or him comes first in the first round will be key in this election and in the debate about immigration, about security, about various economic sovereignty issues. But then, as you were mentioning, you also have the Republican primary early December. The candidate hasn't been chosen yet, and that will also be key. And in this primary, you have a candidate, former Brexit chief negotiator Michel Barnier, who actually has also a very tough stance on immigration. He's, for example, suggesting to have a 3 to 5 year moratorium on non-EU immigration. So these are ideas that could appeal to an electorate who is also conservative but doesn't want to go for the extreme views of Éric Zemmour.
Thank you so much, Caroline Conan there, our, of course, reporter in France. Now, the head of the International Olympic Committee says he held a 30-minute video call yesterday with Chinese tennis star Peng Shuai, where she reassured him that she's safe. For the latest on the saga that's captured international attention, let's bring in our Bloomberg opinion columnist, Matthew Brooker. Matthew, great to have you on air today. I mean, there's so much speculation about exactly what's going on. Does the IOC call allay fears?
Oh, I don't think it does. I mean, some people may feel that it does, and that's certainly the narrative that the Chinese state media is trying to put out. I think there are many reasons to be doubtful about what this interview really tells us. The statement that the IOC put out was extremely short, and it didn't address many, I think, what many people would think would be salient questions, such as the email that they released on the Chinese state media put out last Thursday had her saying supposedly that the allegations of sexual assault that she'd made against the Chinese retired Chinese Vice Premier Zhang Gaoli were not true. I mean, if that's so, then how did they come to be on her verified Weibo account? And why is her account still restricted? Why is her name being censored on the Chinese internet? All these questions are not being answered.
Yeah, and I guess, Matthew, I mean, the question is, and this explains why a lot of people are suspicious of some of these recent videos and these WeChat posts, but is there, I mean, if there's growing fears, is there going to be, political pressure from outside to really get to the bottom of it, or what's the next step?
I mean, I think there's already pressure. I think we've seen a very uncompromising stance from the Women's Tennis Association. It's been very clear that they want movements on any restrictions on Peng Shuai's movements to be taken away, and for her to be able to speak freely and within her own voice, and for there to be a transparent investigation into the allegations that she's raised. And they've led the way, but I mean, there's been been quite a groundswell of people and organisations following her. All these famous tennis players from around the world that have been echoing the same calls. So I think the pressure is there, and it's a little difficult to see where we go from here, though. What happens now?
Yeah.
Probably a little bit early to see whether this call that the IOC held is going to be enough to sort of mollify.
Right. I was going to ask you, Matthew, what more can China do to convince the world, Peng is actually safe?
I think it's clear that she's safe. It's a question of where, at the moment, it's a question of what's going to happen to her now. I don't personally think that it would be the only thing that would really convince, I think, people at large would be to see Peng Shuai able to travel outside China and speak somewhere where she is clearly not subject to the influence of China's government or security services in any way. And it's difficult to see how that happens.
Thank you so much. Our Bloomberg opinion columnist there, Matthew Brooker, with the very latest from China. Now, coming up, Europe saw more anti-lockdown protests as Austria imposes fourth national lockdown and Germany mulled compulsory vaccines. Up next, we have a roundtable on that. This is Bloomberg.
Reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Austria has returned to a full national lockdown. Meanwhile, protests against the new COVID restrictions have taken place across Europe this weekend. Now, from midnight, Austrians have been asked to work from home and non-essential shops have closed. People also clashed with police in the Netherlands and Belgium. Well, let's discuss all of this. Let's discuss Europe's worsening COVID situation with our two guests. Oksana Pisik is a global health advisor and lecturer at UCL's School of Pharmacy. Monica Koppel-Turina is director of Eco Austria. So thank you both for joining us. Oksana, let me start off with you. When you look at the concerns about more lockdowns, first of all, is that lockdowns coupled with vaccinations, and are people still coming forward for vaccinations, or actually when it becomes mandatory, is it more difficult to get people to go to get that jab in the arm?
Well, if we take UK as an example, we were first, we were fast. But we peaked early, and we've now plateaued. And actually, despite all of the media coverage around the celebration of the public uptake, we're about 67% of the total population. Often that's quoted as above 80 if you only consider adults, which sounds a lot better. So that, in comparison to Europe, puts us in about middle of the pack, just ahead of Germany, Austria, places now that are considering mandates in order to boost the public uptake of vaccines due to the rate of spread, which has been very worrying.
So, Monica, can you tell us specifically about what exactly happened in Austria and how the population is taking these mandates going forward?
So starting from today, we have a full lockdown in a sense that non-essential shops are closed. People are encouraged to work from home. It's not an obligation, but they are encouraged. Schools are open. That's new compared to the 3 other lockdowns. So essentially, the Minister of Education had to, think what the long-term costs of lost educations are and decided to keep the schools open. Some people are questioning this decision, thinking that it might make the lockdown longer. So this is what happens, and during the weekend we had some protests indeed. And starting from February, we're supposed to have a vaccine mandate. The question is whether February is an optimal date to start a mandate. So people think maybe it should start earlier. But it's probably the hope is that people will still get vaccinated until this time.
So, Monica, and I think we have images, tens of thousands gathered in Vienna on a Saturday to protest some of these new measures. And it's very clear that, governments are probably fed up in dealing with this because this is a crisis that they can't deal with. And they're focusing their efforts actually on the unvaccinated. The unvaccinated will continue staying in lockdown even when this current lockdown lifts. Will they be able, through mandatory requirements, to get people vaccinated?
That's a very good question. So essentially, that's exactly what you said. So we have these measures in place now, and there will be probably prolonged for the unvaccinated. But the actual mandate is supposed to start in February. So it's another 3 months. I guess the hope is that people will get vaccinated on their own until then, and perhaps that the government wants to have some time to clarify the legal issues of the mandate. But the worry is that this will make the lockdown much longer because the measures are not yet as hard as supposed.
Oksana, who's getting it right? If you look at Europe, and again, you mentioned the UK, template or what we're trying to do here, it's very different from elsewhere in Europe. Is this, also something very cultural, which means that, certain societies take better to vaccination, or is it the spread of misinformation, fake news? Like, what's behind all of this?
Well, there are a couple factors at play here. First, in the UK, our growth rate has been higher than those regions, but stable. And currently what we're seeing in Austria and the Netherlands is a very fast increase. We've got to really pay attention to that growth rate. So they're in a slightly different position, probably because of where we are in the growth curve. Yep. We've had an early autumn high rate of increase like we're seeing there now. And in terms of any government looking to introduce vaccine mandates, that's not a place that they want to start at. It's only going to really fuel opposition groups, unite them around a cause. But their ICUs are filling up. They do not have a lot of attractive options. And so I think in some cases it'll work, but it could cause long-term problems.
I was going to ask you about whether we need to look at infection rates or actually just at the number of people hospitalized in relation to how many ICU beds we have.
Well, the two are completely interrelated. When we start to see a doubling rate of every 10 days, like we're seeing in the Netherlands, that means you're going to see a very quick rise in your ICUs. And you can build more hospitals, but you can't staff them. So it's really the same problem that we have seen in the past, and that's because vaccines, just like a bulletproof vest, not everything gets through. And when we have more tools like antivirals, molnupiravir, more widely available, I think that will mean that this is the last winter of extreme measures.
Monica, do you think that when you look at Austria will be the template of things that are happening in Europe? I mean, I'm a little bit shell-shocked. I just came back from Singapore, where of course everybody has to wear a mask. It's very limited to 2-3 people. Even having dinner outside. And then I come to London and I kind of forgot how open it is and no one's wearing a mask and it's kind of like much more free. Does Austria, mean that there's going to be a difference between what France, Germany and the rest of Europe will do?
Have fairly harsh measures in place. So it's not that people were not wearing masks. So essentially, we had the mask mandates in the rooms. We had some closures. We had the so-called Zweige rule at workplaces and during events. So you would have to prove that you were either recovered from COVID or you were vaccinated to enter the events. And it unfortunately did not stop the infections. And probably the main reason is the fairly low vaccination rate. It's comparable to the UK ones. It's slightly lower than that. So I'm afraid that these measures will not help unless we're able to get many people vaccinated.
Oksana, I know I'm focusing a lot on the, unvaccinated, but how many people still think that the pandemic is, largely a myth, kind of permeated by the media? And is that the main concern for any government? It's actually, that's the part of the population that if you don't vaccinate, then you will have people ending up in hospitals.
Well, the government is losing the war on misinformation, even with partnering with big tech companies, Facebook, Twitter, many of these social media platforms to try to highlight where those misinformations are. It's very difficult in terms of the types of interventions that are needed to persuade people. So absolutely, this is the most complex aspect because it taps into population psychology and all the other almost educational issues. So pandemic is really magnifying some problems that we have swept under the carpet previously that are bubbling up to the surface now. But just one point about Austria in particular compared to the UK, they do have a history of introducing mandatory vaccinations by law. So post-war 1948, we saw similar types of vaccinations being required to stamp out smallpox.
But so what is the chance of the UK actually going to lockdown? This is $1 million question that the cabinet has been pushing against. But if you look at the number of infections, are we looking at it?
Well, I think we're in a time of uncertainty. Based on current rate of growth, we might squeak around it, particularly with at least some supply of molnupiravir becoming available in the UK. But I think, we're on a knife's edge, so it's certainly a possibility. And to Boris, it's never too late to learn lessons. So we've gone through a lot in the last 2 years. I think it's a bit naive to say case closed.
Okay, thank you both for joining us. Oksana Pisik there, a global health advisor and lecturer at UCL's School of Pharmacy, and Monica Koppel-Turina, director of Eco Austria, joining us this morning. Coming up, JP Morgan offers to reimburse Hong Kong bankers that have to quarantine. We'll have more on that story next. This is Bloomberg.
Common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, JP Morgan is planning to reimburse employees in Hong Kong up to $5,000 to compensate for quarantine stays. That's as the financial hub has stuck to its zero COVID policy with some of the world's strictest quarantine measures. Now, let's get more from Bloomberg's Bruce Einhorn, who's also in quarantine in Hong Kong right now. Bruce, I don't know whether you're going to get the $5,000 actually to stay in quarantine, but is it symptomatic of banks and bankers struggling to retain talent in countries where there's a zero COVID policy?
Well, I think we should be more specific about that. At this point, it seems that there are really only two places in the world that are still trying to maintain zero COVID policies, and that's mainland China and here in Hong Kong. But you're right, it is a major problem. Jamie Dimon has talked about that. He was here just recently in Hong Kong. He didn't have to do his 21 days of quarantine the way I and many others do who arrive here from the U.S. He got an exemption. But he did talk about how this is a major problem for the bank in trying to retain talent, because anybody who wants to go to see relatives in the U.S. or the U.K. or most parts of Europe, when they return to Hong Kong, they have to do 21 days, most likely, in a hotel, pick up the cost themselves. So the bank is now saying, we'll help you with some of the cost of that.
Bruce, thank you so much. Given you're in quarantine, we'll get many more TV hits from you, Bruce Einhorn there in Hong Kong. Now, Bloomberg Surveillance Early Edition continues in the next hour. Anna Edwards is in London. Matt Miller will be in Berlin. Kaylee Lyons is back, and she's in New York. They've had a full roundup of the markets. Remember, it's also Thanksgiving on Thursday, which means that U.S. markets have a shorter week. But by Thursday, we're expecting Joe Biden to decide who's the next Fed chair. This is Bloomberg.
There's a pretty good chance that you use products made by Meta every single day. If you've never heard of Meta, that's because it's the new name for Facebook Inc., the parent company of Facebook, Instagram, and WhatsApp.
All right, perfect.
In a spiffy presentation on Thursday, Mark Zuckerberg showed off his vision for what he's dubbing the metaverse. That's a sort of mix of augmented and virtual reality worlds which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on.
Our mission remains the same. It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook.
But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The rapid improvement in the labor market and the deteriorating inflation data have pushed me towards favoring a faster pace of tapering.
I'll be looking closely at the data that we get between now and the December meeting.
We have to make sure that we ease that supply chain. The president's been very focused on that in making sure that turning the ports into 24/7.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kayleigh Lines.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Monday, November the 22nd. Our top stories today. President Biden takes on inflation. He'll speak to the U.S. about rising prices on Tuesday. Markets are still waiting to hear who will lead the Fed. Trying to figure out Putin's next big move, the U.S. warns European allies that the Russian leader may be setting the stage for an invasion of Ukraine. And KKR runs into a roadblock. Its proposed $12 billion takeover of Telecom Italia is likely to be opposed by the company's largest shareholder, Vivendi. A warm welcome to the program, everybody. I'm Anna Edwards with Tom McKenzie in London. Kayleigh Lines is with us in New York. Matt Miller is off this week. Kayleigh, very nice to see you back in the studio in New York. The focus during Friday's session in Europe really on COVID-19. Some of that spilled over into the United States, but the focus of this week, perhaps, the data we're going to get midweek from the U.S.
A lot of data coming midweek, Anna, and of course we are still awaiting the Fed chair decision that President Biden has said is coming before Thanksgiving, so the market is waiting and watching for that. Now, as for how the Asia session shook out overnight, it really was a bit of a mixed picture. You saw outperformance from the likes of South Korean equities, but stocks were a bit lower in Hong Kong. Tech stocks really creating a bit of a drag there after some antitrust fines for big players like Alibaba and Tencent coming from the Chinese government over the weekend. That Hang Seng Tech Index down about 0.75%. Chinese stocks, though, rising about 0.5%. The PBOC signaling that easier policy may be coming in order to combat the growth slowdown. So that is aiding risk assets, but also the PBOC, of course, has to pay attention to the yuan, which is right around its strongest versus a basket of peers in 6 years. And it is stronger once again against the U.S. dollar this morning, sitting at 638.44. And finally, a bit of a bid coming across the commodities complex, but iron ore, one example of that, futures up more than 4% in Singapore. Now, as for the picture here in the U.S., we are starting the week on the front foot. At least that's what it looks like the picture will be come the opening bell in about 4.5 hours' time, with S&P 500 futures up about 1/3%. Right now, we're at 47.10, so we could be looking at a record high later on today. In the bond market, of course, that Fed chair decision, the economic data Anna talked about, and a lot of auctions coming online over the next couple of days are all potential catalysts. And ahead of that, yields moving up 2 basis points on the 10-year. We're sitting at 156.68, a flatter curve, the 5/30 spread sitting at its narrowest since March of last year. And then Bitcoin starting the week on the back foot this morning, Tom. Futures down, or Bitcoin down, about 4 percentage points to $57,000.
Yeah, Kayleigh, you mentioned the change in language from the PBOC. There's a read across to Europe, given the exposure there in countries, particularly Germany. The other factor, of course, is the fact that you have lockdowns and that response to these surging cases across the Eurozone. Maybe a calculation that the ECB will continue to be dovish, and that is feeding through into the upside that you're seeing in the European markets. You're seeing gains of 0.2% over in France, and the CAC 40, the DAX over in Germany is flat. Italy is down 0.1%. There is this story around M&A, Telecom Italia, and the bid led by KKR that is factoring in as well. Over in Spain, gains of 0.6%. And the UK, the FTSE 100 up 0.3%. Basic resources higher on the back of stronger iron ore. That is again linked to the China story and expectation there'll be more measures to support that economy. Let's change it on and see how things are breaking down across assets. Again, gains of 0.2% after losses on Friday here in Europe. Euro dollar is in focus. This is at a 16-week low. Softer again today at 112. The option market suggesting that the single currency will be range bound between 112 and 115 for the rest of the year. The pound is also under pressure by 0.1%, 134 on sterling after the Bank of England's Governor Andrew Bailey and another senior official suggested that maybe the December rate hike is not baked in and should not be considered as baked in. Crude and the oil story, 0.4% is the gain that you're seeing, at least on WTI. A bit of upside after 4 weeks of losses. You've got commentary reports that maybe Japan, Tokyo and Washington are considering releasing their reserves.
Yeah, interesting to see the move higher in Stock 600 then, Tom. It's M&A within the telecom space seems to be cushioning us from some of the nervousness around COVID-19 and the fight against it in Central Europe. Now let's take a look at some of the things that lie ahead this week. President Biden will give a speech on the economy and, crucially, combating inflation on Tuesday as markets await his decision on the next Federal Reserve chair. On Wednesday, we'll get FOMC minutes with that in mind, as well as data on US consumer income, a second print of GDP, and initial jobless claims. On Thursday, markets are closed, of course. It's Thanksgiving holiday in the United States. And then watch how lower discounts and supply chain pressures affect Black Friday sales at the end of the week. Yeah, it's going to be interesting as we get towards Friday, whether the dominant theme is going to be people buying things on Friday, Kaylee, or people unable to buy the things they wanted because they can't get hold of them.
Or maybe people just bought presents a lot earlier because they didn't have a lot of confidence that what they would want would be able to be delivered or in stores by Christmas. But let's get back to something Anna mentioned, which is the fact that markets are awaiting President Biden's decision on the next Federal Reserve chair. It's expected before Thanksgiving, and Democratic Senator Jon Tester of Montana urged Biden to renominate Jerome Powell on NBC's Meet the Press yesterday.
I think Jerome Powell has a proven track record, and Chairman Powell should get reappointed. I think we've got issues that revolve around inflation that he can't do much about as long as he's not confirmed.
Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from D.C. So, Anne-Marie, we understand that President Biden will be giving a speech on inflation and the economy yesterday before he heads to Nantucket for the holiday. And I think I said yesterday, but I meant Tuesday. Is that when we get the Fed chair pick?
We don't know yet, but that's certainly a signal that if he was going to announce it before Thanksgiving, which the White House has mapped that out as the timeline, it would obviously be on the one agenda item that we got for the week, which mentions the president talking about the economy and talking about inflation. Now, inflation has been the top theme for the president. When he's giving all these Build Back Better speeches and pushing forward his economic agenda, he completely talks about inflation. But what the market is waiting for, and what we are, of course, waiting for, is the Fed chair decision. And Senator Tester coming out and saying he is in Camp Powell and thinks that Powell should be reappointed is on the heels of just Friday. We heard from two more senators, Democratic Senator Merkley as well as White House, coming out and say Powell is not the guy for the job, especially when it comes to embracing climate change at the Fed level. So you see the Democrats are divided in this decision, and that is likely a reason why we are seeing the White House drag its feet a little bit. The president is behind many of his predecessors in terms of how quickly they are nominating a Fed chair.
Yeah, a few market voices telling me, Anne-Marie, that if this decision had been made months ago, then it wouldn't have become such a big issue in the market's eyes. But now the market really focused on it. So what are we expecting him to say on Tuesday around inflation? Come forward with some sort of inflation-fighting strategy, or deliver a sales pitch around Build Back Better? Is that what it's going to be about? And try to, once again, go through those arguments why he doesn't think it's going to add to inflation problems?
That is likely going to be one of the key points, and we just heard from Brian Deese over the weekend saying just that. And the president likes to, of course, point to the research, the economists and the analysts that we read, many of which are saying that this will, in the long term, hamper inflation. But that is really what this administration is struggling with. Selling this package now as it's going to help fight inflation, but really that's in a long-term inflation. What the White House is right now having issues with is short-term inflation. So the other issue the president could potentially talk about on Tuesday is that there was over the weekend the Japanese prime minister saying there is talk between the U.S. and Japan on potential strategic reserves of both their petroleums.
Yeah.
And Japanese press is talking about a decision as soon as this week. If it's not the Fed chair, that could be another decision we can hear from the White House.
Watching those higher prices at the pump. Thank you so much to Bloomberg's Anne-Marie Horder in Washington, D.C. Now let's turn to trouble in Europe. Protests against a new wave of lockdowns have taken place across the continent this weekend. And meanwhile, a Bloomberg scoop, sources saying the U.S. has shared intelligence Russia may be planning an invasion of Ukraine. Joining us now from Berlin is our Europe reporter, Maria Tadeo. So Maria, let's focus on that second part first. What do we know about this U.S. intelligence?
Well, look, this is what we know, is that the U.S. government has provided European allies and partners with information that could suggest that Russia is indeed building up that troop presence very close to the Ukrainian border in what could potentially turn out to be a very rapid invasion of the country. Now, you know that for weeks Russia has denied this, saying they have no intention of invading Ukraine, and the European Union, of course, in a very tricky spot when it comes to Russia. On the one hand, they have to deal with them on the energy, but then also keep a very close eye on Ukraine. Remember, the EU has always said that they will stand by the Ukrainian government. Now, over the weekend, and this is where it gets interesting, we did hear from the French Foreign Minister, Jean-Yves Le Drian, who said, we don't confirm this information, that we believe that Russia is willing to invade Ukraine on the short term, but he did say if there was sign of aggression, there would be very serious repercussions for Russia. Of course, he didn't detail what those would entail.
You have to wonder whether the Russian leadership is timing this at a moment, of course, when the European Union is struggling with these very high rates of infections and then reactions. We're seeing protests on the street over the weekend. Get us up to speed on what happened and the government's response.
Yeah, look, we saw the pictures over the weekend. There were protests pretty much across Central Europe. We had them in Belgium, the Netherlands, but also in Austria. And it's Austria that's the focus point when it comes to the virus in Europe today, going into that 20-day lockdown, restrictions for the unvaccinated, and of course that very controversial government mandate to get the vaccine. This is no longer a personal choice. You have to get the vaccine mandated by government. Now, the other focus point is here in Germany. There is big speculation in Berlin about the next steps when it comes to the virus. We have seen infection rates rocketing in Germany for the past 3 weeks. The question is whether the country could be contemplating something that looks like a national lockdown or a government mandate for a vaccine that is much tougher and would force this on certain sections of the population. We just heard from the health minister, by the way, suggesting that this winter is very clear. You either get the vaccine or you face potentially what could be a deadly situation.
Maria, thank you very much. Our Europe reporter, Maria Tadeo, with the latest on some, various themes, essentially, geopolitical and the COVID fight. Now, back to the corporate news agenda. And U.S. private equity giant KKR is offering $12.2 billion to buy Telecom Italia. That represents a 46% premium to Friday's closing share price. But the move could set up a fight with Telecom Italia's biggest shareholder, Vivendi. Tommaso Ebhardt, Bloomberg's Milan bureau chief, joins us now with more. And Tommaso, despite the 46% premium, I think, to Friday's closing price, Telecom Italia trading up by 24%. Is there quite a lot of execution risk assumed here then?
Sì, buongiorno da Milano. Essentially, we are hearing that Vivendi is going to oppose the deal. Vivendi owns, is the biggest shareholder in Telecom Italia, owns 24% of Telecom Italia. They think the offer is way too low, that is going to undervalue the company. As a reminder, Telecom Italia shares has fallen over 70% in the last 5 years. Vivendi bought Telecom Italia at an average price of €1 per share. So even the offer by KKR would halve the value of the investment for Vivendi. That's a very simple mathematical reason why Vivendi is against the offer. On the other side, we heard quite positive reaction from the Italian government. The Italian government sent a statement last night saying they will come investor in Telecom Italia. The Italian government has its say on the deal. Why? Because they have a veto power on any acquisition of strategic asset, and also because they are the second biggest investor in Telecom Italia through the state lender Cassa Depositi e Prestiti.
All right, Bloomberg's Tommaso Ebhart, thank you so much. And let's get back to the U.S. markets now and take a look at some stocks moving in pre-market trading. And I want to stick with the deals theme because Bloomberg reporting overnight that Monster Beverage, which of course makes energy drinks, something I could probably use this morning, is looking at a tie-up with Constellation Brands, which of course is a brewer of beers like Corona. No real details on that. This is just a report according to people familiar with the matter. But as a result, Monster's down about 0.7%. Constellation Brands higher by about 1% in early hours. A big mover to the downside, though, is Sweetgreen. Of course, it made its public debut last week, 77% rally off the back of the IPO, but it fell on Friday and shares lower again on this Monday morning, down about 9%. And another stock coming more back down to earth is Rivian, of course, the EV maker that is also relatively new to the public markets. At one point last week, it was trading at $172 a share. This morning, it's at $122, down about 5%, but still, this company is worth more than $100 billion, Anna.
Kaylee, yeah, really interesting. Continue to watch that story and all of the other players in the electric vehicle space. Just want to bring you some breaking news lines coming through today in the UK. The UK Prime Minister Boris Johnson is speaking this morning at the CBI, Confederation of British Industries Conference. This is the country's biggest business lobby, so he's addressing a business audience. He's saying that he expects people to resume office working. Perhaps you are watching this program from your office. Perhaps you are still at home. That is the Prime Minister's view of where you should be doing your job. More on the markets when we return. This is Bloomberg.
And to regulate differently and better, lengthen our lead in all the amazing new technologies of the 21st century. AI, cyber, quantum computing, and all the rest, and all the...
Front, when your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Anna Edwards and Tom McKenzie in London. Well, Anna, Tom, on your side of the Atlantic, as we know, Europe is dealing with a fourth wave of COVID-19, and you're really seeing fears around that and resulting lockdowns in places like Austria showing up in the FX market. The euro right now is at its weakest against the dollar, going all the way back to early July of 2020. And against the British pound, it is now within 1% of its post-Brexit record low. I have a great chart on the Bloomberg terminal that shows that. For our audience listening on London DAB Digital Radio, basically all you need to know is that this line has been pointing downward since really the end of 2020. So joining us now is Eddie Vanderwalt. He is Bloomberg MLive columnist, and he joins us now. So Eddie, you're really seeing that showing up in the FX market. The equity market, though, in and around record highs, and you have the likes of Goldman Sachs saying, don't worry, shrug it off, risk assets can continue to rise. What do you make of the different reaction between these asset classes?
Yeah, Kelly, it was really striking at the end of last week just how much FX reacted. It was really focused on the FX markets more than anything else, the equity market and even the bond market, which, you know, pretty sanguine, but we saw some really big moves in FX and particularly focused on the euro. And, you know, I think there's a bit of a divergence in perception of what the policymakers are going to do. Europe, and I'm not just talking about the central bankers here, I'm talking about, you know, governments. Governments are more likely to react, you know, and be a lot stricter with regards to lockdowns in Europe. And I think that is being reflected at the moment. One thing to note, though, is that in Europe, while we see the cases pick up a lot, we're not seeing the same in hospitalizations. And this is something to keep an eye on. Maybe we don't see Europe react or you stay as strict as the lockdown.
And even within the Eurozone, we see a lot of divergence, don't we, between Germany, Austria, and other places, Eddie. Let me ask you about something that's dominating thinking as we head towards Thanksgiving, and who is going to lead the Fed? Will it be Powell? Will it be Brainard? And I ask this because we've heard some political voices, Democrats over the weekend, suggesting maybe Powell would be doing more on inflation if he were confirmed.
Yeah.
I haven't heard that really from markets' voices. I don't hear many people saying Powell would be, you know, tapering faster or hiking rates if he was confirmed in the job. Is that something that the market is going to be thinking about this week?
You know, I think this is definitely the big theme of the week. We really want to hear what the outcome of this is, and we're expected to hear before Thanksgiving. So not a lot of time. So yes, we want to know. Ultimately, it doesn't matter who do we get. I think for the markets, it doesn't matter very much. But I think for the markets, they want an answer at this point because nobody who's in position, you know, whether it is Powell or whether he gets a replacement, they don't want to act decisively until they know they're going to be in place for where the people have their backs, as it were.
Yeah. Okay, Eddie, thanks very much. One will watch then as we get closer to Thanksgiving. Bloomberg Market Live's Eddie van der Veld with us on set in London this morning. And remember, if you want market analysis from the Markets Live team, MLIV Go is the function to use on your terminal. This is Bloomberg.
think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation, and we believe that the quarter three was the quarter that was most affected.
From New York City.
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back. This is Bloomberg Surveillance Early Edition. Tom McKenzie alongside Anna Edwards here in London, Kaylee Lyons in New York. Here is your first word news. The US and Japan reportedly may make an announcement this week on the release of oil reserves. That is according to the Yomiuri newspaper. President Biden has tried to build international support for using stockpiles to bring down the price of oil. JP Morgan is offering to reimburse Hong Kong employees up to $5,000 to compensate for staying in quarantine. Hong Kong-based employees may claim the amount for a single quarantine stay for personal trips to visit immediate family members. JP Morgan CEO Jamie Dimon, who just visited Hong Kong, says the city's restrictions make it hard for the bank to retain talent. Former bankers at Credit Suisse have told investigators the bank still helps US clients hide accounts from the IRS. That is according to a filing in a civil lawsuit. In 2014, Credit Suisse paid $2.6 billion in penalties and agreed to stop the practice. The bank says it continues to cooperate fully with authorities. And air traffic for the Thanksgiving holiday in the US is expected to approach pre-pandemic levels. Travelers may be considering their plans with some concern after recent headlines about thousands of cancelled flights. American and Southwest Airlines have reduced the number of flights, brought workers back from leave, and hired new ones in hopes they will have enough employees over the holidays. So, Anna, I've got to hope then that the holidays are not going to be ruined by a lack of workers. This demand is obviously very real. I'm going to be commuting from North London to slightly further north of London for Thanksgiving with some American friends. My wife's from California. We go big on this. They have to roll me out of the house at the end of the day. But yeah, let's hope it's a good holiday season for everyone.
Let's see what Kaylee has planned. I mean, Kaylee, is this Thanksgiving being talked about and approached as a life almost back to normal kind of situation, or does the virus still hang over this one?
I think it may depend on if you're vaccinated or unvaccinated, Anna. All I know is that people are traveling again. I touched down at JFK yesterday morning and the place was packed. The customs line was over an hour long. You had people waiting there for relatives with signs and with balloons. So I think, especially now that international travel has opened back up here in the U.S., it could be a very busy holiday and a lot of families getting reunited, maybe, Anna.
I think Thanksgiving and all I think, in relation to travel, I think planes, trains and automobiles, but that's probably a little too 80s reference for many. When we come back, we'll be back to talking about our top story around the COVID fight in Europe. Wolfgang Monchau joins us, Director of Euro Intelligence. This is Bloomberg.
London with 40% remaining. 101 years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels.
There are dozens of international companies in that airframe size who have realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom Mackenzie in London. Kaylee Lyons with us in New York. Matt Miller is off this week. And Tom, we should just draw everybody's attention once again to the UK Prime Minister speaking at the CBI conference this morning, the Confederation of British Industries, a big lobby group. So he's speaking to a business audience, essentially urging, well, a few messages coming through, expecting a strong post-COVID economic rebound, expecting people to resume office working. Some of his ministers saying earlier it looks like Christmas will be going ahead without restrictions. Just worth contrasting, I suppose, what we're hearing here from the UK government with what we heard from Germany. The backstories are different. The vaccination rates around children, the boosters, is all very different. But it's worth just highlighting that Europe is not one story.
A real reliance here in the UK on that booster campaign, and they've started to lower the age rate, of course. My parents have had it. They want as many people to get the booster as possible before the Christmas season. But is there an over-reliance on that? And will at some point we have to consider the kind of restrictions that are playing out in Europe? So far, of course, the intrinsic kind of gut feel of the government here is always to push on back on that and put it to the last minute. So we'll see how it plays out. But yeah, he's saying, look, get back to the office as well. There's a social capital that young people need to bring to bear as well by getting back into the office. The Prime Minister of the UK there speaking at the CBI, where he's faced a bit of pressure, by the way, in terms of tax rises here in the UK.
So if you're watching this programme from home here in the UK, maybe take note of what the Prime Minister at least thinks should happen. Kaylee, what are you looking at in markets as we head towards the start of the US trading day?
Well, there's not a lot of fear present around that fourth wave of COVID-19 that in Europe that you two were just talking about. You do see stocks higher in Europe, granted off of session highs, but still the stock 600 higher by a little more than 1/10%. It is telecom stocks actually leading the way. And here in the U.S., futures are in positive territory. Looks like we will start off the week on the front foot. Right now, S&P E-minis up about 0.4%, 16.5 points, right now at 47.11. So we could be looking at the 67th record high of the year come the opening bell in about 4 hours' time. In the bond market, we are seeing yields moving higher. We're up about 3 basis points on the 10-year to 157.54. And then, of course, the COVID fears are playing out a little bit more in the currency markets than in the equity markets, with the euro at its weakest against the dollar, going all the way back to July of last year, right now at 112.86. And as for some stocks moving in pre-market trading, I have a bit of an EV theme going on here this morning. Of course, a relatively new public company, Rivian, which has more than $100 billion valuation, has come a bit more down to earth, trading at 172 at one point last week. This morning, around 122. That stock down a little more than 5%. You're also seeing Lucid Motors coming in about 3.5%. Tesla, though, in positive territory. That stock rising the better part of 3 percentage points. And of course, Plug Power, a hydrogen fuel cell maker, is also higher by about 1% before the bell, Anna.
Okay, do we count those as small moves for that particular sector? Let's see how they play out then. Kaylee, Austria returns to a full national lockdown today. Back to one of our top stories, certainly here in Europe. Germany is also not ruling out another lockdown. That's despite protests over the weekend as Europe grapples with a brutal wave of the coronavirus pandemic. Joining us now, Wolfgang Munchau, Euro Intelligence Director. Very good to see you, Wolfgang. Thanks very much for joining us. And worth pointing out for the international audience, Europe is not one place when it comes to this conversation situation. Certainly, if you look at Spain, you look at France, we've had very different policies and we have very different outcomes in different places. How concerned are you about the winter and how drastic measures have to become in Austria and in Germany?
Well, we've seen how fast the situation can change. I remember a bit over a year ago, we all said how wonderful the situation in Germany is, how resistant the Germans are to the virus, and now it's exactly the other way around. This time the virus comes from the east. It's Eastern European countries more affected than the West. It travels to France. France, the infection rates are beginning to pick up. In Germany, it's quite alarming. In Bavaria, they're shipping patients out to Italy now. It's exactly the inverse of what happened in the first wave of the crisis. In Berlin, they have stopped emergency operations that are not COVID-related. So we're seeing stress emerging in various parts of the country. It's mostly in the east and mostly in the south. There are pockets in the west and the north which are very much like the UK.
Okay.
But that's also to do with vaccination rates. Vaccination rates in the north and in the west are very much like they are in the UK, and vaccination rates in the east are extremely low.
And do you see anything in the policies that have been introduced so far that will try to push those rates up? Because the pass sanitaire in France was praised by some, and certainly French politicians like to say that this was part of the reason they saw higher vaccination rates in France. Could something like that work in Germany or Austria? It's too late for that now.
It's a bit too late for that, and the Germans have not learned the main lessons from the last crisis, which is that you have to centralize the management of the vaccination campaign. It's still a matter of the government does the funding, the states do the organization and the supervision, and everything goes wrong and they disagree on policy. That's basically what happened. The health minister has just essentially banned the Pfizer vaccines for the next phase of the vaccination because he has a big stock of Moderna vaccines in the cellar, and the doctors don't want to use the Moderna vaccine. And there's now protest about what is the right vaccine to use. Now, we should not be in that situation when the country should be starting the booster shot campaign, when only a few million people have had it. It's a much lower rate than what we've had in the UK, and which is the reason why the UK is as a country in a better position facing this winter.
But this is again a mirror image of what we heard from policymakers in Germany 12 months, 18 months ago, when there was clarity on communication where you weren't getting it from other leaders, and now you have mixed messages from the leadership in Germany. What are the potential political costs? And we saw the protests over the weekend across a number of Eurozone countries. How should we be thinking about this politically?
Yeah, I mean, one of the problems is that Germany is sort of in an interregnum between two governments. The old government that's still running the campaign is kind of on the way out, and one gets the impression with some of the ministers that they're no longer fully in charge. Not an accusation of Angela Merkel. She is really giving her best, but there's only so much she can do at the moment. Now, the new coalition, which isn't in power yet, has also sent many conflicting signals about this. The FDP, the smallest part of the coalition, the Liberal Party, is against compulsory vaccination. It is against national lockdown, and they managed to water down the policy of the incoming coalition, which is weaker than that of the old coalition. So as we're going, we're changing government at a time when the political consensus for a strong reaction has fallen. I think it could become a real big obstacle for this coalition, because if they go into this winter with a wrong policy, and they will be blamed, this one will be on them, and they will be blamed for not doing the right, not taking the right measures. So yeah.
And we've seen some steps, we've seen some announcements that the coalition is getting closer in terms of the shape of that coalition, but the read-through to the economics is there in terms of what happens with this COVID response, and then the policy differences arguably could become more pronounced between these coalition partners.
Absolutely. I mean, a lot of the fiscal planning in Germany is premised on the idea that we have an incredibly strong recovery of the kind of the way the UK Prime Minister just announced, and that everything is going to be hunky-dory going forward. Now, with another winter, what's happening already is that the non-vaccinated people cannot enter restaurants. Or they have to show tests, which practically is the same. The skiing season is off because of Austria. So we're seeing, the economic recovery that was supposed to have happened in the second quarter, then in the third quarter, and in the fourth quarter is probably not going to happen until the second quarter of next year. So further push downwards as prices are rising. So real incomes are falling. So we're going to see a real crunch in real incomes in the population.
Okay, the economic impact clear. Kayleigh, jump in.
Well, Anna, I want to pivot more towards geopolitics because Wolfgang Bloomberg reporting over the weekend that the U.S. has shared intelligence with the European Union about a buildup of troops and artillery on the part of Russia, potentially preparing for an invasion of Ukraine. Could we get a united Western response to that, or is there just too much else going on for these countries to come together and form a kind of common coalition on that front?
Yeah, I'm very skeptical of the EU forming a very strong position on this. For a start, I mean, Putin knows that the EU can only handle so many crises at one time, and he has already, contributed to the crisis in Belarus by supporting Lukashenko. So the EU is already overwhelmed with the border crisis.
Well,
yeah.
And in terms of other crises the EU is dealing with, we've of course seen a major energy and power crunch playing out over the last several months. How does the Nord Stream 2 relationship also complicate this?
I think what will happen is there will be, even if Putin took the step, I'm not sure he will, but even if he took the step and invaded, eastern Ukraine, if you take the most extreme of those scenarios, the Western response would be one of outrage, but we will obviously not starting to stop Nord Stream 2, or we will not starting to, start real sanctions, cut Russia off from the financial. From the financial markets, which we can do through the SWIFT system. So there are a number of potential responses we would have, but the EU will not have the unity to pull the emergency trigger. So they will do what they always do. They will talk. Merkel will call, or Scholz, whoever will be in power by then, he will call Putin. And then there will be an attempt for a diplomatic solution. It's always been like that. So I'm not very hopeful that there's going to be this strong EU response. The EU is not set up for this kind of thing.
Okay. So we limit our expectations there, perhaps, Wolfgang. Thank you very much, Wolfgang Munchau. You are Intelligence Director with us to talk about the COVID fight and also some of the other geopolitical tensions set to affect Europe through the winter. Coming up on this program, then, let's talk about Bitcoin. Bitcoin failing to regain momentum. We'll discuss the outlook for the end of the year. That's next. This is Bloomberg.
You should be thinking about formerly incarcerated people as representative of their families also and of their communities. These are human beings. They're not disposable items. They are not to be warehoused, locked away, out of sight, out of mind. And so I'm out here in the public because I am the conscience of those folks of America, I hope. I'm hoping to prick their conscience and know that I am just a symbol of a much greater problem.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Anna Edwards and Tom McKenzie in London. Well, crypto volatility seems here to stay. Bitcoin losing almost 20% in 2 weeks and down another 3.5% or so this morning. Joanna Ossinger, Bloomberg News editor for Asia Crypto Coverage, joins us now from Singapore for more. So, Joanna, volatility is nothing new in the crypto space. Is there any reason to believe it will go away in the last month or so of the year?
Hey, Kaylee. Well, it is always a possibility, and the last part of the year tends to be pretty good for cryptos. So if you look at history, you could start believing in it. But right now, the momentum is not looking great for Bitcoin. It hit a record on November 10th, and it's just been headed downward. It made another run at 60,000 yesterday, but it's now sitting just around 57,000. So it's the momentum is definitely not in the right direction for the bulls.
So momentum not favoring the bulls right now. Good morning, Joanna. What about if we widen the conversation to not just Bitcoin? Which are the cryptocurrencies that are doing well right now?
Yeah, well, Avalanche is actually surging. They did a deal with Deloitte last week that they'll be helping with disaster relief funding in the U.S., and now they're up about 50% or so. And they actually are the number 10 crypto. In fact, they've surged above Dogecoin and Shiba Inu. They were always one of the examples. Everyone said Avalanche has all this development. It's been done by these really smart people, and yet it's below these meme coins. But now they are number 10, fighting with Dogecoin for that spot. And then actually Crypto.com, after making that deal to get the naming rights for the LA Arena, $700 million or so over 20 years, as Bloomberg reported, they have surged as well, about 55% in the past 7 days. And they're now the number 13 crypto. So those two have been doing well.
Joanna, do we have any sense as to whether or not there are catalysts ahead for Bitcoin and Ether?
Yeah, well, look, there's always the chance. We have seen some buying by whales, especially in October, and that tailed off a little bit in the last few weeks. So that might not be, or that might be part of the reason that the weakness is being seen right now. So if people start to buy again into the end of the year, we also have the lurking institutional buy-in. If you start to see more places buying in to the end of the year, this also may have helped at the start of this past year, where institutions are making their strategy now going into the next year, and they might start buying in January. And so there might be some anticipation that places that have held off until now say, you know what, we're ready to get into crypto. We're going to do it at the start of the year, and it could help the December-January timeframe.
Now, Joanna, I read reliably from Bloomberg colleagues that El Salvador held a Bitcoin week. What were the highlights to come out of this?
Yeah, well, one big thing is they're going to issue the world's first sovereign Bitcoin bonds and build a Bitcoin city. So, of course, they have been on the vanguard of doing things from a national perspective, but they're planning $1 billion in these tokenized Bitcoin bonds. We'll see how that goes, and we'll see how the Bitcoin city goes. It'll be free of income taxes, property taxes, capital gains taxes.
But it will be right underneath a volcano, I also read. Joanna, thank you very much.
Yes, also that.
With the latest, also that, on crypto. Thanks very much for the update. Now, coming up on Balance of Power, we will speak to the Nobel Economic Laureate, Paul Krugman, joining programming. That is at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
when you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
בבקשה.
I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom Mackenzie in London and Kaylee Lines with us, of course, in New York. Now, turning to France, just 5 months before the next French presidential election, the far right-wing pundit, and author Eric Zemmour has now surpassed Marine Le Pen in several opinion polls since September. Zemmour spoke exclusively with Bloomberg's Caroline Conan during his last trip to London.
Elle dit ça.
She just says that in order to reassure everybody, to reassure the markets, particularly to justify the European Central Bank's desire not to increase their interest rates and not to interrupt its quantitative easing policy. But if the European Central Bank, under the pressure of the Germans, felt obligated to increase the rates, then we wouldn't be laughing so much. The French, the Italians, and the Greeks are even worse, actually. I believe that there's, first of all, a source of concern.
One thing fueling this inflation is, of course, the energy prices. Russia is one of Europe's biggest supplier of gas, and gas prices are obviously surging. What needs to happen there with Russia?
Well, look, it's not Russia that is so prices. What is energy?
But President Emmanuel Macron announced just last week that he now wants to relaunch new nuclear reactors. So he's right.
Well, did you not realize that presidential campaign is in 6 months? 6 months, and many people had said that they wanted to relaunch nuclear power stations, and we had lost it because there was this disdain for nuclear for 4.5 years. He had time to do it. He didn't do so. Now he's saying he's going to do so. That's fine and dandy. But frankly, really, that's being converted to last minute.
Marine Le Pen has actually accused you of dividing the national camp. Would you unite behind her if she's higher in the polls by March, and vice versa?
You know, there's nothing divisive. Everyone is allowed to present themselves. We're not talking about a parliamentary regime like in England, where only the political parties have campaigns. It's a French situation. The presidential campaign, which was decided by General de Gaulle, is in fact the meeting between a man and a people. It's not the meeting of a political party with its financing.
The far right-wing pundit and author Eric Zemmour speaking with Bloomberg's Caroline Conan. He's not formally declared his intention to run in the presidential race, but it is assumed, and his right-wing views well known. So Caroline was trying to get to some of his energy and economic policy there. Now, Tom Keane, co-anchor of Bloomberg Surveillance, waiting in the wings, and will be, of course, joining from the next hour. Tom, very good morning to you. Happy Monday this morning from Europe. I think big tech very much on your mind.
Yeah.
What are your thoughts this morning?
This is a story in November that's really caught up with us. This is the vault hire in big tech, really led by Amazon, which has lagged through the year. This is the great missed call of earlier this year. Most people, Anna, in December of 2020 were saying, oh, tech, let's shift, let's move it, let's get away. NASDAQ 100 now actually outperforming SPX year to date. The white line down below is Standard & Poor's. Excuse me, I'm gasping, 500. Yeah. And you've got a set of different companies moving up, with Amazon really the laggard in orange and has really come up here in the last 2 weeks.
Yeah, what is the read across to the cyclical story? I mean, this is a yield question of yields, of course, still below 1.6 on the US 10-year. How that plays in the cyclical trade, and that was the read across to Europe. That was the analyst call here. Expose yourself to Europe where the cyclical action is clear.
No, I think that's part of it. The core issue here is, yes, a yield call, and there's the economic dynamics of big tech. But really, Tom, I think what's happened here is just the sheer revenue surge that we've seen in big tech having a bang-up year, really led by Google.
Led by Google. The other big, well, we're waiting for a lot of data stateside, of course, this week, Tom. Midweek, I think we get all of that. Also waiting to find out who will lead the Fed. It seems as if we've been waiting a very long time for this, either confirmation or change.
John Farrow's off for a holiday lengthened work week, and so because Farrow's off, it's given Biden permission, President permission to come out with whoever's new selection is. It's a parlor game right now. I would suggest over the weekend, it was those tilting to Powell against the supporters of Brainerd, saying that Mr. Powell has been weak on climate change, which is in my economic textbook. The Fed is supposed to manage climate change. It's in there somewhere.
A hint maybe of irony there from Tom Keene, co-anchor, of course, of Bloomberg Surveillance. Thank you very much indeed. Thanksgiving is the deadline the president gave us. Okay, let's take a look at what else we are watching. From one central bank, of course, of the primacy of that economy over in the US to the one in China. I think this is absolutely crucial. The PBOC coming out with this quarterly report. Look, the real implications of this are that the reading through from Goldman Sachs, Citigroup and Nomura is that the central bank of the world's second largest economy will now take a more open, loose, dovish stance on the economy because the data is souring. So we should watch for any moves from the PBOC to support this economy.
Yeah, absolutely, especially as the zero COVID focus continues in China and we continue to see outbreaks. Let me just pivot us to what I'm watching this morning, Tom, and that is very much around the COVID outbreak in Europe. So it's just a continuation of our monitoring of that story, essentially. But in Austria, we're now seeing, of course, today is the day where we've seen introduction of the national lockdown measures. I was talking to a behavioral economist earlier. I thought this was really interesting. He was suggesting that the way you try and drive up vaccination rates, yes, you tell everybody it's mandatory, but what does that really mean? She was saying it might result in fines. Would that start to become some kind of badge of honor within the community that doesn't want to be vaccinated? Was a sort of interesting behavioral slant on this. So we'll watch Austria. We're also watching Germany. The health minister there saying they need to reduce contacts. All of this in the context of, as we were discussing with Wolfgang Munchau earlier, the German government, of course, in its formation, transitioning from the Merkel era to a new government.
Yeah, that coalition taking shape. We're hoping to get more details in the weeks and months ahead. A very different message on the COVID front from the UK, as we were also discussing. Boris Johnson saying there's no reason to shut down or put in more restrictions ahead of the holiday season here. Plenty more coming up.
Yeah, absolutely. He says we should all be back to the office. So more surveillance is ahead. We'll hear from a host of great voices.
get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
The call on the Fed really is the derivative of the call on the U.S. economy.
Anybody who says that they can nail down an inflation forecast over the next year probably has too much confidence.
It's unsurprising that economists are sort of all over the map.
There will be significant fiscal drag in 2022.
Probably things won't be quite as rosy, or people won't be quite as optimistic going forward about economic prospects.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A holiday lengthened work week. We're here. Kaylee Lines, already a lengthened Monday for her. We're glad she's in for John Farrow, Lisa Abramowitz, and myself with an exceptional Monday morning. We've got news here we're going to go to on Russia in a moment. But right now, Lisa Abramowitz, countdown to Tuesday, where the president jets off to Nantucket.
Yeah, basically right before he jets off and leaves Washington, D.C., the expectation is he will deliver a speech on how to lower prices for Americans. The expectation is this means he's going to announce a Fed chair nominee, and he's going to potentially release some sort of detail on whether he's going to open up the reserves, the oil reserves, in tandem with the likes of Japan and China. Honestly, a big speech on Tuesday right before it goes dark in Washington.
Well, that's what we're planning on Tuesday. And of course, we are planning to give you full perspective on Brainerd Powell. We'll do that around that announcement. Don't know the times yet. Of course, Lisa, again, I look at where we are in the markets this morning, and so much of this is the raging debate over the weekend of what inflation will do to yields.
Yeah, the idea here that Rich Clarida, the Fed vice chair, who is thought of as incredibly powerful and poignant, not necessarily ideological when it comes to the rate hike divide, came out and said, perhaps we have to accelerate the pace of taper. This was a game changer on Friday. It was sort of lost in the shuffle. Chris Waller, Fed governor, also having a similar kind of view, although even harsher, even more definitive. This is a game changer, Tom. You're not necessarily seeing that in the markets so significantly.
And Governor Waller, of course, the lead axe in research at St. Louis Fed, hugely respected. We must bring up here the reporting of Alberto Nardelli and Jennifer Jacobs with Bloomberg. Lisa, this is a carefully written article, not with much quote, but the bottom line is paragraph 3 or 4 says Russia has a plan. The Kremlin has responded in the last minutes.
Yeah, the Kremlin came out and said, no, this is all normal. We're not doing anything exceptional. We're not going to invade Ukraine. This is the usual background level of routine scheduled and unscheduled military maneuvers. In response, the ruble falls. And that's, I think, telling you a lot of what the concern is right now.
I want to make clear the Kremlin not responding directly to the Bloomberg article, but nevertheless out there. And it moves ruble as well. We go out to a 74 handle. Kaylee Lines has been looking in the last hour out of London with dollar at ruble as well. And Kaylee, you've got to look at this equity market. Surprise, Kaylee, NASDAQ 100 now year to date outperforming S&P 500.
Well, and the S&P 500 still up about 25% over the course of 2021, Tom. This equity market continues to rally on. We're looking at futures once again north of 4,700, and you have a number of strategists like David Kostin over at Goldman Sachs publishing overnight and this morning saying, look through any COVID-related concerns.
Yes.
This too shall pass. Equity markets and risk assets are going to continue to rally on.
Kaylee, I just featured with Anna Edwards in London. The tech company, Amazon is the one that's really come on here, and we see that with retail. Dana Telsey talking about, and Kaylee, I know you feel this way, it's a celebratory holiday season. It is for Amazon and everybody else.
Yeah, it'll be interesting to see how that translates into Black Friday, or if a lot of people actually did their shopping earlier, because one thing we have seen is people front-loading their buying because of supply chain issues, but also the deals started like a month ago. You could get Black Friday deals weeks ago, Tom.
We don't have time to do it here. We're going to take an hour here later on this week. Does anybody care about Black Friday anymore?
About shopping?
Yeah, I don't
know. You should survey your household, Tom.
I don't know. Vet bills at Walmart at 4 a.m. trying to get in as well. The data, let me do it quickly. Your equities rebound off of the Friday carnage. Dow futures up 136. Good morning, John Farrow. I did the Dow futures for you. Futures up 17. The VIX 17.96. The yield market, well, it's a churn here, and we'll get to that across the morning as well, with a lot of economic data really loaded into Wednesday. There is a little bit of economic data today, isn't there, Lisa?
Yeah, there's just a little bit being the operative word. U.S. October existing home sales expected to come out around 10 a.m. for the United States. Interesting to see whether we see a dip. The expectation is yes, that those will decline because this is seasonal. But will it be a smaller dip than usual for this time of year? If it is, how much does this really speak to the need for more supply, which really speaks to that 19% increase in housing starts that we've seen in October versus the average in 2019? It's kind of a huge gap. 1 p.m., I'm doing this for you, Tom. Welcome back. U.S. is planning to sell $58 billion of two-year notes. That's at 11:30 a.m. And then at 1 p.m., $59 billion of five-year notes. This will be interesting. If you take a look at the two-year yield, it's climbed to the highest level since the pandemic really hit peak in March 2020, but still is way below where it was to start 2020. If you take a look at five-year yields, they actually have increased more significantly relative to where they started the year last year. This, to me, really indicates the rate hike debate. Can the Fed just execute a couple of rate hikes, or are they going to enter a cycle that's a bit more of a tightening one than people are previously expecting? And at 6:10 p.m., Atlanta Fed President Raphael Bostic is planning to join Bloomberg Television. I'm very curious to hear how he reiterates, if he does, Fed Vice Chair Rich Clarida's comments on Friday. He basically came out, and I'm talking about Clarida, and said, I'll be looking closely at the data we get between now and the December meeting. It may well be appropriate at that meeting to have a discussion about increasing the pace at which we are reducing our asset purchases. Watch this space, Tom. December meeting is live and important.
Let's begin our coverage this week with Brian Weinstein, head of global fixed income at Morgan Stanley. An important discussion. Of course, Morgan Stanley in the equity call, far more cautious than we're seeing from the great bulls on Wall Street. Brian Weinstein, the headline that gets my attention moments ago across the Bloomberg, the Bundesbank is framing out 5% plus inflation, just under 6%. To you and me, that's unimaginable. How far from transitory are we?
The question everybody wants to know. Listen, the more that we talk about it and the more that people say it, the further away it gets, right? I mean, inflation is a mindset amongst other things, but people are acting differently. Consumers are spending differently. Now, on the other hand, the math is a little bit more on the central bank side, right? If we can make it through the next 4 or 5 months, you will see some of these inflation numbers fall. And so on a mathematical basis, we're probably peaking in the next few months. On a more psychological basis, I do wonder if inflation stays sticky for longer.
Brian, the debate seems to have shifted to when the Fed will lift off, to how many rate hikes the Fed will execute in this cycle. Where do you fall into that debate, the idea of the peak Fed funds rate of this cycle?
Well, it's interesting you say that the debate has shifted. I think there's actually a pretty decent amount of uncertainty around whether it's a 22 story into 23. I think central banks want to hold the line and go later. But your second debate is right too. Are we going to 1% or 2%, or is this really do we have to go to back towards 3 or 4, which is more normal? I would suggest we still don't have evidence that we have to go to 3 or 4%, right? That rate hike cycles are still going to be shallow. That we can't survive very, very high real rates. The economies are still fragile, and that we're not really looking at a different cycle here, but just a question of timing and how quickly the Fed will be forced to do it. Again, I think they want to be slow.
Well, and the Fed has reiterated time and again that tapering is unrelated to liftoff, really trying to divorce those two ideas. But as Lisa and Tom were talking about at the top of the program, you have this idea of an accelerated taper circulating. If we taper quickly and that ends more quickly, does that also mean liftoff will come sooner?
It's so hard to separate the debate. As much as I appreciate why you'd want to do it, obviously the quicker you do it, the sooner you are allowed or able to raise rates. I think we may see the Fed become creative. They'll have to be to convince the markets that ending taper is a bit more in that emergency, right? Tapering early, ending QE early was more of an emergency Fed policy, pumping in liquidity. It's hard to understand why we still need those policies. But again, once they're done, the market will pull those rate hikes forward on any strong data. So it'll be an interesting thing to see how they use language to try to do the dovish taper. It is not easy.
Brian, you model out some form of level of a 3% inflation. Of course, academically, Adam Posen at Peterson Institute has been huge on that kind of level. The great fear, the great destabilization fear is it's a jump condition to 3% inflation. Do we do this in a grind or do we jump?
You know, it feels like we're jumping right now, certainly. But again, I think it ends up being a bit more of a grind, right? I think if you look inflation over history, and you were a central banker and you picked a 2% target, which obviously we've done, I think you'd be hard pressed to be confident that you'd hit it. Over time, we tend to have inflation move in waves. As it moves up, 2% is not where it stops. So I do think there is that chance that inflation gets higher and stickier. But I do think it's more of a grind because, as I said, the math behind it is that you fall once again before you start to rise, unless there are other external shocks that we have to face.
Brian, thank you so much. Brian Weinstein here of Morgan Stanley on an eventful week. A great set of guests coming up as well. Ladies, I really want to talk here about what Americans aren't looking at within our stability of utility prices. Lisa, it's a remarkably different story over in Europe. Javier Blas out on Twitter, the great commodities ex for Bloomberg, has lit it up this morning with the surge that we're seeing in Spanish electricity, German this, Danish that. It's something we don't know in America.
It's a global issue, and frankly, Europe is really feeling it acutely. It's not just over in the mainland, continental Europe, but also the United Kingdom. Right. We've been talking a lot about this. How does this affect the political discourse over there? And I do wonder how this sort of translates into the relationship with Russia, with the idea that Angela Merkel is leaving. She was sort of the main conduit between the Kremlin and the rest of Europe, and that's a major source of the oil. That's the reason why this Ukrainian story is actually significant.
Lisa and I sliding in at 5:50. Kaylee had the early shift this morning. Kaylee, what did you learn with Anna Edwards about the European utility story in the 5 a.m. hour?
Well, it's just another aspect of the crises that Europeans are dealing with in tandem. You have the energy story, as Lisa alludes to, Nord Stream 2 becoming really critically important at a time where Vladimir Putin may feel more enabled to take chances geopolitically. But also you have the COVID conversation and the protests we saw over the weekend in places like Vienna, elsewhere, as you're seeing more restrictive measures coming into place, as they're now not just dealing with an energy crisis, but a fourth wave of the coronavirus.
Exceptionally busy week, and it's a holiday lengthened work week. Lisa Bramlett and I scheduled to be here Friday. Scheduled,
Me too, Tom.
Scheduled. Yeah, Kaylee.
24 pounds.
Welcome.
Javier Blas to join in the 8 o'clock hour. Stay with us. This is Bloomberg.
With the First Word News, I'm Leanne Gerrans. In suburban Milwaukee, Wisconsin, an SUV has sped through barricades and into a Christmas parade. At least 5 people were killed and more than 40 others injured. Police arrested 1 person. They're not saying anything about a possible motive. A police officer did fire his gun trying to stop the vehicle. There's growing concern that Russia's Vladimir Putin may be planning an invasion of Ukraine. Bloomberg has learned that the US has shared intelligence with European allies that shows a buildup of Russian forces to prepare for a large-scale push. The Kremlin says that Russian troops' movements on its own soil do not present a threat to anyone. A spokesman says US allegations are aimed at building up tensions. Now, the US and Japan may reportedly make an announcement this week on the release of its oil reserves. That is according to the Yomiuri newspaper. President Biden has tried to build international support for using stockpiles to bring down the price of oil. Here in the UK, Prime Minister Boris Johnson will lay out plans for a dramatic expansion of the country's electric vehicle charging network. The goal is to add up to 145,000 charging points a year to the system until the end of the decade. That is when the British government will ban the sale of new gasoline and diesel cars. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
How does an extra $1 trillion in spending not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal. But Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I'll be looking closely at the data that we get between now and the December meeting, and it may well be appropriate at that meeting to have a discussion about increasing the pace at which we're reducing our balance sheet.
Richard Clarida, the Vice Chairman and the Dean of Columbia Economics, really, I should say the head of the Columbia Economics Department, as well as tenure at PIMCO. He ends, Lisa, do we know when Vice Chairman Clarida's term ends?
It's next year, so this is
okay.
one of the positions that President Biden has to fill. Will he fill them? When will he fill them? Okay, maybe you could tell us.
I don't know. You know, it's one of the announcements we're going to have here, and I guess we have the announcements going into. What do you say, Lisa? Is the betting on Tuesday right now?
That's my betting, but I was just being slapped down. Honestly, I find this fascinating because they said that they expected to have a decision before Thanksgiving. He leaves for Thanksgiving on Tuesday. Right. He says he's giving a speech. Come on, let's go.
I got 8 ways to go here with Anne-Marie Horton right now. She has tried every coffee shop in Nantucket, and of course the Handlebar Cafe always comes out the winner, flying into ACK. And, you know, I look at Anne-Marie and the president, and off he goes to Nantucket for a vacation. Is it just understood he's going to announce this on Monday or Tuesday? What's the backstory here?
It's Tuesday, the president said, in about 4 days. Obviously, that came and went, and we didn't get an announcement. And then it was, we're going to hear before Thanksgiving. And then we heard from Press Secretary Jen Psaki that she does intend that they'll have something on the Fed before Thanksgiving. But yesterday, economic advisor Brian Deese on Fox News would not touch this. He said, you'll hear more about substance and timing on the Fed from the president. So what we do know is that in his schedule tomorrow, before he goes off to Nantucket, is a speech on inflation. Does that mean he's going to talk about and give us either the Fed chair or potentially the other slate at the Fed? Or is this just going to be another Build Back Better, inflation, potentially gasoline prices speech? We just don't know.
How does it play over the weekend? How does it play in your neck of the woods that we need a chairman who's focused on climate change? I'm fascinated, whether it's Brainerd or Powell, how climate change fits into the mandate, the dual mandate of the Fed.
Well, if you listen to the latest comments earlier this month from Chair Powell, it doesn't fit into the core mandate. He was asked a question about whether or not should banks be giving loans to coal companies, et cetera, and he said squarely that is not a decision for the Fed. That is for you, Congress, to decide. And then what we had on Friday was Senator Merkley and White House coming out with a statement saying because of climate change and the fact that they think policymakers need to take more of a tougher stance in it, they do not think Chair Powell is the right individual. But we should note, Chair Powell did bring the Fed into a global working group of 80-something central banks focused on climate change. He does talk about the risks, but potentially they think, some of these progressive lawmakers think that if you elevate Governor Brainard to chair, she'll welcome climate change even more, potentially more stress tests on banks. Look what the Europeans are doing. They think that maybe she will lean into that multilateralism and some of the risks you see the European central bankers talk about.
How much is this, though, distraction into policy failure? And I say this as Senator Tester of Montana came out over the weekend on NBC's Meet the Press, and he said, come on, we can't fight inflation. We can't have a Fed chair that actually is effective at doing what his job is if he does not necessarily have the term that follows. I mean, how much is this the Democratic pushback that's increasing?
Well, Tester's coming out squarely for Powell. He thinks that he deserves a reappointment. And to his point, he said all this wavering puts the current Fed Chair Powell, and also if he was going to elevate Brainard, in a difficult position because they're almost in wait and see on whether or not they should potentially make a policy move to combat inflation. This is how he feels. He feels that this decision should be made sooner. So if we don't get a decision today, it will punt this clearly till tomorrow. We'll punt this into next week. Then we're really going into December. If we don't get a decision
today, we're into December. I'm on the edge of Pharaoh here. Lisa, it's unthinkable they would punt this into December.
It's unthinkable, and it really raises questions about deadlines. Anne-Marie, before we get run out of time here, I do want to get your view on the other aspect of this speech, whether they're going to announce some sort of strategic petroleum reserve release, especially with Japan saying that they're potentially going to coordinate with the U.S. and China having already made a move.
China making a move. We do know the United States has been courting some other big consumers, one of them being Japan. And the Japanese press over the weekend says that could come as soon as this week. So if we don't get a Fed decision tomorrow, potentially the president is going to announce more barrels hitting the market from the Strategic Petroleum Reserve. This is a potential. This is something they have been talking about. I will say one credit to the White House. We are wavering our decision on the Fed, but their verbal intervention in the oil market for me has been stunning. I have seen verbal intervention in the Gulf. I've been on the other end of the camera with Saudi oil ministers talking down the market. I have never seen the White House do this quite the way they have over the past few weeks. The question is verbal intervention enough? Is that enough to keep a lid on oil prices? They're incredibly worried about gasoline prices. The latest CBS poll says that is the key reason while everyone is worried about inflation, it comes back to consumers at the pump.
Would there be pushback from progressives, though, if the Biden administration does make that move, Anne-Marie, considering that in many ways you could argue runs counter to the climate agenda we also were just talking about?
It does run counter to the climate agenda, but you've already seen some Democratic senators come out, like Senator Schumer, saying you have to tap the SPR. Progressives also have constituents who don't want to pay, potentially, going into the winter, $4 a gallon for gasoline. So I think they'll take that one as this has to be done in order to protect the consumers at the pump and the concerns about rising inflation.
Anne-Marie, thank you so much. Anne-Marie Horton on the watch. I'm Brainard and Powell, and of course we're watching that here over 2 days, and we look to have a special Fed show for you when we see the announcement along that way. Lisa, your thoughts here, and I guess it goes back to the auction, but the gloom, there's a theme, Lisa, every weekend to the gloom, and the gloom is OMG, transitory's dead, inflation's here, we all see it, and yet I'm thunderstruck by the optimism among equity strategists, all in all.
Right now, some people are saying we're still at peak liquidity. We haven't really tapered substantially. We still are pumping a lot of money into the system, and we still have the fiscal funds helping prop up the economy. And to add to all of that, we have the reopening trade. Why would equities go down, especially with bonds yielding as little as they are? That's still the story, Tom. Yeah. And that's the reason why the NASDAQ just keeps outperforming.
I mean, Kaylee, I look at the equity markets here pushing back Savita Subramanian at Bank of America. And Mike Wilson, I thought, was really something this weekend, talking about it's the multiple, it's the valuation that will pull back.
Yeah, Mike Wilson has been talking about valuations. What Savita Subramanian has been bullish because of is because of margin and the potential margin compression because of these elevated price pressures that actually didn't really transpire during this earnings season. And I would note on that front, David Kostin over at Goldman Sachs, who published overnight saying equities can continue to rally, said that as inflation pressures ease, that's going to feed right back in to that fundamental story for some of those sectors more exposed to those headwinds, and that's going to turn into a tailwind.
You know, what's important here, folks, out in the zeitgeist, I think I'm going to give credit to Joe Weisenthal. I really don't want to do that, but I'll give credit to Joe Weisenthal for getting up at this hour. And Joe really noting somewhere in the zeitgeist, Goldman Sachs looking at some form of new productivity. That'll be our theme with Adam Parker. He's with Trivariate Research. Adam Parker on the data. He's very good at the statistics and the data of this market. We'll find the data distinction of this great bull market. Futures up 19, the VIX 17.89. Stay with us. This is Bloomberg. The common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector in Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Bloomberg Surveillance. Good morning, everyone. Jonathan Farrow, Tom Keene, Lisa Bramowitz. John off this week. Very deserved week off. Lisa Bramowitz with us, Kaylee Lines as well. We got a huge set of news flow here. Before we get to Adam Parker, Lisa, I really want to look at the data. And the data is what it is. Oil's come in a little bit, all in all, away from the $80 level. But Lisa, as you mentioned, stronger dollar is seen by DXY, is seen by Bloomberg Dollar Index, but some huge dynamics in Europe, certainly off the protests that we saw this weekend with Euro Swissy and, not surprisingly, Swiss strength.
Yeah, the idea here that the euro is now the weakest versus the Swiss currency going back to 2015, the weakest versus the dollar going back to the summer, and this really comes from the lockdowns, from the protests that Kaylee was talking about. Can I just point out, Austria, entering lockdown, has 64% of its population fully vaccinated. Germany, 69% of its population fully vaccinated. In the United States, 58%. Why are the lockdowns, the headlines there, where it's nowhere near the popular sentiment in the United States?
This came up this weekend as well. On the Euro-Swiss chart, folks, and this is when I actually met young Farrow, is that collapse that you see of massively strong Swiss franc, and then Swiss franc coming back with weakness. And the new strength, really over the last 3 or 4 years, is really stunning. To see Swiss franc go to 103, 102 would be earth-shaking for global Wall Street as well. Right now, Adam Parker joins us here, Chief Executive Officer, Travariat Research. Adam, what is the distinction right now? I featured 12 months ago, everybody was saying, get out of tech. That worked out. Tech's done great. What is the singular Parker distinction right now into 2022?
You know, I think that you previewed it. I think people are more cautious on the stock market, worried that earnings are going to be too high. And I also think people think the Fed's going to act, and that could cause a big rotation. I'm probably on the other side of both those things. I'm pretty optimistic on U.S. equities, and I think the Fed won't act for a long time.
I mean, and Kaylee, this is really the parlor game that we've got now is Fed watching. And what's so great, Kaylee, is Adam Parker, like Priya Misra, is saying, it may take longer.
Yeah, it feels almost like it couldn't actually take any longer. Remember when the conversation was, oh, we'll get the Fed pick after Labor Day? Well, it's well past Labor Day, and now we're at Thanksgiving. The question is, will we actually get a pick on Tuesday? The other question, Adam, is whatever, if it's a second term for Jerome Powell, if it is a new term for Lael Brainerd, they're going to face the same problem, which is that inflation is proving persistent. It is elevated at the same time that the labor market recovery probably isn't where the Fed would like to see it. How do you think they do that dance? Are they going to have to just react to inflation first regardless?
I've always thought the Fed were smart, okay? It always bothered me when there was some guy 2 years out of college saying the Fed's dumb, you know, even all the way back to Bernanke and the financial crisis. And I always thought to myself, well, he went to Harvard and MIT, and he's been studying crises for 30 years, and he has access to all the best information. Are you sure he's the dumb one, right? And it goes all the way through to Powell, right? So I kind of look at it and think, well, first of all, they're smart enough to look at markets. The 10-year yield's been stable at 1.5. The 2-year backed up, it's been stable at 0.5%. The 5-year break-even's 2.25, right? So is the market worried about massive inflation sustained? I don't think so. I think the Fed looks at that. And then in terms of your point on costs, right, we know we've seen lumber down 40, 50% in the last 6 weeks. We know we're going to see a lot of the commodities in the next 6 to 18 months roll over, depending on which one. And so they'll be looking at deflationary prices in certain areas, trying to figure out if they have stable pricing in the middle of 2022. And your labor point's spot on. I think we're all kind of confused or bewildered about labor participation. And yes, the headline unemployment number's low, but we know the participation is also part of the issue where we get real wage growth and all that. So I think the Fed will wait. And if I'm guessing, it'll be, you know, I don't know, 2024, 2025 before they move the front end, not 2 or 3 times next year. So, you know, and also we're all burned from last cycle, right, where we know that everyone called for it to back up, I don't know, every quarter for 20 quarters before it happened at the end of 15.
Well, Adam, you made the point there that the bond market looks relatively sanguine on the inflation question, and the equity market, you could argue, too, given we're dancing in and around 4,700 on the S&P 500. But also, both of those markets are benefiting from liquidity that remains quite abundant, and now you're having a conversation about a potentially accelerated taper. What do you think happens when the tap turns off?
You know, I've always been confused by that. I mean, you can analyze certain things and the rest you make up, right? So what we're analyzing is the week-over-week change in the Fed balance sheet versus the week-over-week change in the S&P, and that has a statistically significant relationship. Tapering just means that you're adding at a lower rate than you used to be before, you're not massively declining the balance sheet. So that's one point. And then two, I think it really will come down to the actual moving of the front end higher. And my sense is that the 10-year yield won't back up a ton without growth being strong. And so if growth is strong, I think the U.S. equity market can still do okay. And I look at the world and think mostly corporate earnings in the U.S. are going to be higher next year than this year. And if they're higher, the equity market can still work. There'll be a rotation underneath. We know that. But I think at the top line, the market can still go up.
So, Adam, are you part of the unicorn call of single-digit returns for the S&P 500, which everyone always seems to predict as we get these huge year-after-year gains, and then we still get huge year-on-year gains the following year?
Look, we're at 21 times forward earnings, right? The long-term average is 17 times forward, 15 times trailing, right? So is the long-term average relevant? Maybe not, right? We have a different set of companies right now, less capital intensive, less inventory focused. We have, very extreme interest rates versus history. We might be at the right multiple. So I don't believe in a long-term mean reversion, Shiller PE, CAPE stuff. That doesn't work because the market's so different than it used to be. So the multiple might be reasonable right now. And yeah, I think you have a buyback, you have a dividend yield, let's call those combined at 3%. You should get organic earnings growth in the mid-single digits on top of that. So yeah, you could have high single-digit return as a base case. And then if the multiple expands, which I kind of think it will, at least over the next few years, you can get double-digit returns. I don't think that's impossible.
So you actually had a really interesting point among your many interesting points in some of your research recently, where you're talking about the increasing dominance of the 60 companies that have market capitalizations exceeding $100 billion. And you talked about possibly coming up with strategies where you overweight those very large cap names and underweight the rest of the universe. Can you talk about where you are on that and what the theory is behind it?
Yeah, it's interesting. We call it actually the Nifty 90. Believe it or not, there are now 93 companies that are 100 billion cap or larger. And you're right, it's 60 more than it used to be. There's only 30 just a few years ago. So if you're a generalist portfolio manager in the U.S. equity market, a few years ago, you kind of had some opinion on those 30 names, right? You had met the management teams. You had some general view. Now that there's over 90, it's kind of harder for you to know how to, really be on top of all of them. So we came up with a framework. We have a quantitative model. We look at the sell-side analyst estimates. We look at the out-of-consensus hedge fund ownership, gross margin expansion. We look at share gain, et cetera, and came up with a systematic framework to rank order the stocks. I do think that there will be a bunch that can still grow pretty well, and it probably favors a lot of the tech-heavy part of the market from here.
Adam, your PhD out of Boston University in statistics. I want you to look at the great statistical miss on growth. The answer, as you just stated, is growth has been stunning. What ratio or dynamic of ratio are you using to see a continued persistency in growth excellence? Is it sales growth or is it something more esoteric?
It's just, in my mind, it's one kind of level on the income statement below that, which is gross margins. I've never had a period in my life where I started doing different research, and the answer at the end of the kind of paper for the teacher, so to speak, was gross margins matter. We've done work looking at how to identify compounders, which is sort of part of your question. How do I get names that can consistently compound? And we looked at revenue, we looked at gross margins, we looked at earnings growth, upward revisions. The answer was gross margins. And it makes sense to me, Tom, because we're in an environment where we know rising logistics and transportation costs, rising commodity costs, rising wages are the issues that companies are facing. Those that can handle them are going to be great stocks into 2022. Those that, whether it's Walmart or Pepsi or others aren't going to work. So I think you need not only the revenue, but you need the gross margins to expand to be a winner.
So quickly here, if you take gross margins as your ratio of study, how far out the x-axis do we need to go? I would suggest in this bull market, the bulls are extending out the x-axis to rationalize their ownership.
I think that's right. I don't know the answer to your question, but I think it's probably at least for the foreseeable future. And that might be a shorter horizon than you and I want it to be. But I think if people think gross margins can expand for the next 2-3 quarters, that's about where they can really have sharp pencils. And after that, they'll have to see what happens to the economy and other issues. So as long as they have some story that either on the revenue side, you're getting better pricing or better mix, that's what helps your gross margins. Or on the cost side, it's some combination of labor, materials, and depreciation. If that cocktail looks good, and you think you have an above consensus view, you got a good